If you have any questions, feel free to raise your hand. When you raise your hand, it'll put you in a queue, and then I'll invite people up. We can have a discussion about anything you want. So ask me anything related to APE, AMC, market crash, whatever. It's kind of
no topic is off the table.
Hey man, thanks for hosting the call. Just had a quick question, man. Over the last little bit, we're all seeing all the shills and FUDs come out, claiming to be, long time diamond hands, and they're all, spreading FUD. AMC's dead, GME's dead, and all that BS. And a lot of them are spreading the question that, it's gonna go up in stages. So for example, it's gonna squeeze to maybe like, give or take $100, and maybe a couple months down the line, $200. Is this going to be in stages for the squeeze, or is it going to be a one-time thing because it's been compressed for 2 years now, and looks like even going the slightest bit up, they're scared? So what do you think?
What do you mean? Is it going to go in stages? Is that what you're asking me?
Kind of like, for example, let's just say like in the July run-up, for example. Oh, sorry, last year, July, in January run-up, in July run-up, there were stages, right? So I guess they jumped up a little bit, came back down. And, is that going to happen again if there's another squeeze, given the liquidity issue? Or is this going to kind of do a final run and kind of jump right up to, in the thousands or whatever the case may be? What do you think?
Oh, man. Well, I mean, obviously nobody can see the future, right? So whatever I say, it's probably going to be wrong, to be honest with you. But I wouldn't be surprised to see it be like a multi-stage run up. You know what I mean? Like go up, halt, come down, go up, halt, come down, over and over again. Probably reach new all-time highs and then come back down below that, below, well below all-time highs before it runs again. I wouldn't even be surprised to see it like a few months apart if it happens, due to like if any runs occur, I think, due to like a CSIP change or shorts being squeezed.
Yeah.
I wouldn't be surprised to see it run up hard, hit new all-time highs, get shorted back down real hard, and then run up again if there's like a market crash situation that really causes all the fucking shorts to cover, not just the naked shorts, So yeah, I don't think it's going to be a fast squeeze. I think we'll only see the top, like the very top, for microseconds, but I think overall it should last quite a while. You know what I mean? Nobody's going to time the top perfectly.
Perfect. Thank you, man.
Of course. Thanks for asking. Yeah, Laser, feel free to go ahead and ask away if you have any questions, Laser. If you feel like hanging out too, that's cool.
I'm just here listening to what's going on and seeing how much informed it is compared to the GameStop apes.
What were you saying? You're just here seeing what's going on, what?
To see how informed this group, the AMC group, is compared to the GameStop apes.
Oh, gotcha. A lot of us are GameStop apes, except we're not elitists. We're kind of open to the fact that there's more than one stock that's been heavily shorted on the stock market, and when you look at the number of shareholders and the open interest on the options chain, I think you'd not realize, but I think you'd see for yourself that there's a lot more interest in stockholders of AMC than there are in GameStop. And I own both, so I'm kind of saying this like in an unbiased way. But I'm glad, though. I'm glad to have you. Thanks for asking.
As a GameStop ape, are you aware of that much going on with the BCG versus GME case?
BCG Pactual? Or what?
Boston Consulting Group sued GameStop for the $30 million when Cohen kicked BCG out. The issue being there's a lot of conflict of interest going on. The judge, Cone Connolly, that's the chief judge, is a former Mitt Romney lawyer. Romney and his other lawyer, Paul Roy Traub, were involved in NeoStar that became GameStop. Romney I didn't find that out until the apes helped me out, that Romney came from BCG too. And the thing is, he's not allowed to be on the case for a dozen reasons. Common sense, model rules of professional conduct, and judges' judicial canons of conduct of the appearance of impropriety. Because I personally know, as a former head of eToys, he was my lawyer. And when, as a partner of M&AT, Morris Nichols Arston Tunnel, who was Goldman Sachs and Bain Capital lawyer. There's just a lot of games going on. Be careful if you don't pay attention to the games going on and do your double D, you can get bit in the butt.
Yeah, I hear what you're saying. There's a lot of fuckery going on right now. We can talk about GameStop if you want. This one's kind of more of an AMC ape Q&A, basically, because of all the FUD going around, all the bots and shills and whatnot that are talking about ape and AMC in a negative way. But yeah, we can talk about GameStop for a little bit if you want. Like, I didn't really catch a question in what you said, but I'm definitely intrigued by it. And I know a little bit about it. It sounds like you know quite a bit. So I appreciate you sharing. If you got anything else that you could shoot my way, if you could DM it to me, that'd be great.
The thing is to understand the gravity and gravamen of all the games that go behind. The stock investors, retail stock investors,
help get us a step closer, but none of these things are gonna cause the MOAS. You know what I mean? I think truly I've always thought that there's 100 catalysts along the way. I think a lot of people that have followed me for a brief time think that because I'm talking about executive orders or C90, 90 calendar day, issues with the selling syndicates and other things like that, they think that everything I'm mentioning is going to cause the short squeeze, but that's not the case. For me, it's everything combined helps lead me to where we need to go, and for me, that's in order for me to make money, aside from just on a fundamental basis, but on the fact that the shorts have been greatly manipulating this, it's with the understanding that it's only going to happen when a proper market crash causes these assholes to get margin called by other institutions around the world, not just by the DTC, because the DTC can withhold their margin calls. So I think it's an institutional liquidity crisis that we've got going on. And the fact of the matter is, I've never believed that anything would cause the actual MOAS short of a full-blown market crash, kind of like you saw with dry ships and you saw with Volkswagen and other stocks like that, during liquidity crisis. But yeah, I really appreciate it, Laser. Good looking out.
Hey, boss.
What's up, buddy?
Hey, just got done. We did a show on Telegram with retail stock, and that dude got some good logic. Like the stuff that he brings to the table. But one of the things I wanted to comment on Laser's point is one of the big differences now between now and what he was talking about back in Obama and all the other kind of time frames is we have a united force right now of more than 4 or 5 million apes. It's got to be even more than that now, and that is something that has never happened before. There's never been a united force of retail like we are now. I mean, we are the biggest hedge fund on the fucking planet, bar none. I mean, there's no disputing that. And not only do we have more buying power because we're such a big united force, but we also have more brain power. We're like a big supercomputer, if you think about it, with as many people as we have sharing information, learning, growing, educating. That's the key. That's why we're going to win in the end of all of this, is because we share the knowledge, we educate, we bring people up, and that is why we are going to win. The only way we don't win is there's only two ways we don't win. And it's really, really simple. One, we get psychologically beat by these hedge fucks. That's it. People leave because we get scared, because they believe the FUD, because they think, oh, the AMC's the enemy, GameStop's the enemy, Adam Aaron's the enemy, Boss Blunts is the enemy, I'm the enemy. They believe that shit and leave. And it would have to be a whole shitload of people leave. And that ain't happening, because we are simply at the point now where people are so pissed off. People are so, like, we've taken so much abuse. We're battle hardened. We have taken so much. We're at the point where we're like, you know what? Fuck that. There's no way I'm letting these hedge fucks win now, because we are going to kick their ass. I'll go to zero first before I let them win. We're digging our heels in. The other way we lose, catastrophic, cataclysmic world event. And at that point, money don't mean shit anyways. So we fucking won this already. So don't panic. Don't freak out. Just fucking buy when you can, hold, and we got this shit.
I love your attitude, man. And yeah, I agree with pretty much everything you said there. There's too much division going on, too much he said, she said going on across all, between GameStop and AMC and just retail in general. And I think because a lot of people don't understand like who to follow and who to ignore and whatnot. And so a lot of people just wind up following everybody and then not being able to differentiate the difference between who's an actual retail investor that's invested in these stocks, some random that is talks a nice talk but always ends up being negative, or ends up saying good things about AMC, telling you what you want to hear, so that they can turn around and talk shit about Adam Aaron or about ape shares, or in order to cause negativity. Yeah, this is what these guys excel in. These hedge funds literally employ PhDs and psychologists, sociologists, in order to help their engineers write the algorithms that cause retail to sell, to buy and sell at certain times, or for them to front run these trades. And back to Laser's point, also, he mentioned, like the guys that are like that retail investors, they get caught up. Well, you know what? Like guys like Zach Morris and them who are pumping and dumping stocks, I think they deserve to get caught up, honestly, and I'm happy that they did, because they were front running trades. They're going out and saying, "Oh, look at CEI," and personally, me, I love CEI because it's at Camber Energy Inc. They're a stock that ran up pretty hard, after AMC and GameStop did in January. And while they may have helped it run pretty hard, they were also front running the trades and doing the opposite of what they were telling people they were going to do. And that's not really something that I'm worried about, because you guys, well, maybe you guys, but if anybody here follows me on YouTube or on Twitter, you've seen me make $100,000 purchases in one sitting, of AMC on live streams, an ape and things like that. And it's like, and I continue to buy more. I'll post screenshots of myself buying, hundreds or thousands of call contracts on AMC One and AMC and shit like that, because I'm.
No, this one's really my last one. Oh no, AA fucked us. No, oh he didn't. Well, wait a minute, hold on. March 3rd. Like, look for consistency. So make sure that people you're looking at, they're consistent. That's number one. The other thing is if you see that someone you're listening to, you're following, you're reading their DD, whatever, if they're bringing you on a roller coaster journey of emotions, probably not good for you. Of course, do whatever you want to do, but that's why bad cop, bad cop works. Is because they feed you good information, which gets you excited, gets your dopamine going, gets you kind of happy, oh shit, I might get out of this. And then they hit you with the bad cop. Boom, smack you with it. they put you on that emotional, like that up and down and up and down. And what that does is that weakens you. And that's why they bring people into movements like ours. And this isn't just about AMC. Like, this happens all over the world in all kinds of different things. The 1% have it in for us, the 99%. We're the 99%. We're unifying to fight against them, and they fucking hate that. They absolutely hate that. So what do? They put bad actors in our movement to create division when there isn't division there. They put bad actors in here to bring us on that emotional roller coaster so they can psychologically beat us. Now, if you identify those people who are doing that to you and you remove them from your existence, like, you know, hey, this person makes me feel shitty, then they make me feel good, then they make me feel shitty. You recognize that and you remove that from your sphere of influence, you're going to be much better off.
Definitely agreed, my friend. Well stated. You sir, go ahead, buddy.
What's going on, big man?
Chilling, bro. Enjoying my Friday.
Attaboy.
Did a live stream a little earlier, and I'm like, hey, man, I'm not doing shit. I hear people over there in Bam's stream getting all concerned and, you know, getting all worried. So I'm like, you know what? Let's do a stream of our own. Let's turn that negativity.
This is why we fucking love you, buddy. I just got on Avatar, smoked a fat fucking joint.
Say is, you can also post it up to the top if you want. If you don't want to do that, with the little share button, and then click share to space.
Algos that are just looking for is in the single digit dollars price range. Algos fucking play with that bitch all the time. We've seen it. We see it all the time. When a stock is up into 40 and 50, algos are not going to play with that as much because that's just not what they play with. They play with these lower price range type of stocks. Algos are going to pick those out and hit on them. So in a way, doing the reverse split makes it harder for the shorts, makes it harder to locate shares. It also removes us off the short list of algos that are just looking for opportunities to fuck a stock up. There's so much benefit to this, and the whole they're taking away 90% of my shares. That is absolutely unequivocally false. It is not even close to accurate. You have 10 $1 bills, and you're just going to turn it into one $10 bill. So then the next argument, see, and this is where we've got to defeat this FUD. We've got to start using logic and reason and understanding. Okay, so you have less shares, but they're worth more. So what the next piece of FUD that comes at you, and I've had people yelling at me about this, is, oh, well, now I only had to wait till 1,000 to make 1,000,000 before, and now I got to wait till 10,000. Yeah. Okay. So what part of you tells you that, okay, after this reverse split, there's no way it can go to 10 times more? I think of it like in market cap. That's how I think of it. I think in percentages. I don't think in raw numbers. I think in percentages. If the squeeze theoretically without a split was to go up 28,000%, whether there's a split or not, it's going to go up 28,000%. Whether there's that split or not, it's going to go up 28,000%. Your holdings, in turn, will go up 28,000%. So realistically, the split doesn't matter as far as what your final number ends up being. That's my thought process.
You know what? I didn't previously understand what you meant about market cap, but hearing you explain it now, I actually understand exactly what you're saying. With 10 times fewer shares, it doesn't matter if the share price per share goes to 1,000 or to 10,000, because with 10 times fewer shares, period, fewer shares available.
Market cap for and harder for them to short. How do they do that? They
did that with GameStop, with AMC, and that's why these guys are so worried and scared. The market makers and hedge funds are so scared about options that they're putting out these campaigns that options are bad, that you're giving your premium to the market makers, blah, blah. This is how they make money. Yeah, they make a little bit of money like that when they go out of the money. But then when guys come along and turn $20 into 6,000, 10,000, 20,000, which is completely realistic in options for people that don't understand options. That's very easy, not easy, but it's very feasible because it just happened. You know, it's happened many times in the past, and it will happen again many times in the past, in the future. So I think that the people that are pushing the, you know, options are bad things are really uneducated in that fact. Excuse me a second.
Well, and while you're dealing with the Banshee, one thing I did want to bring up here is something we talked about tonight on my spot, is simply this: the FUD is unreal, and we knew this would come. We knew the closer we got, the more FUD there would be. You know, I mean, there's all the cliches that, you know, you get most fire when you're over the target, or I've played video games and you see more enemies when you're heading in the right direction. I mean, they're right. They're right. But without cliches, I mean, the whole FUD that Adam Aaron wants to destroy AMC is ludicrous. It's absolutely ludicrous because we would already be done. He would already be destroyed. We would already be in bankruptcy. Like, none of the moves he makes, like, again, look at history. None of the moves he makes sense for killing AMC. So he's not against AMC, which means he's not against us. Why? Because we're invested in AMC. So one of the things that is proof of this, and proof that he's making the right moves, is take a look at the market cap in the middle of January 2021, before that first run up. The market cap for AMC, because it was only like 100 and some odd thousand shares, 100 and some odd million shares at that time, but the market cap was around 400 million. So the whole market cap for all of AMC was around 400 million. And even after all the fuckery we've dealt with, everything that we have dealt with, we're still over 2 billion market cap. What does that tell you? The right moves are being made. I look at market cap more than a lot of people do, apparently, and apparently I'm kind of fixated on it. But it tells you a lot about a company. So again, it's all about perspective. While Boss is off handling with that, we got Matt Alex has requested. So hold on here. Let me see if I can do this. All right, and let's approve. Let me see if I've got this. Did I approve it for you, Matt? Nope, still says requested.
Hey, can you hear me?
Oh, there we go.
Hey.
All right. Hey.
So nobody in here probably knows me. I'm a longtime lurker, listener, learner. Been in it for 2 years plus. So I've been listening to a lot of you guys for a long time. So thank you for giving me a chance to talk. But just a couple observations I've been looking at recently over this, just some logical things, kind of like what you were talking about, AMC for all. And I haven't heard people mention this, but with the reverse split, that not only affects us, but it also affects the hedge funds as well. And I've heard people mention a 90% discount, but if I'm not correct, it's going to cost them 1,000% more to short. It's going to cost them 1,000% more to cover. And I don't hear people talking about that. And that, you know, that's going to compound the liquidity crisis that they're already facing. So that's one thing. And the other thing that I don't hear people talking about a lot is that, you know, everybody says they're going to get out from these shorts and they've shorted and they're going to get away from it somehow. But if you look at it logically, people are buying those shorts. So they're creating a plethora of shares in the open market that we probably have all bought. Those don't go away until we sell. So there is a significant problem with the entire stock market if those shares are just left out in the open. Do you agree?
Yeah, I mean, the shorts after. Let me talk on your first point.
Yep.
The shorts after the reverse split. So let's touch on that, because you're right. People don't talk about that for the most part. Well, I mean, I talk about that. I know bosses talk about that, and I know some other people who've talked about that too. But the FUD never wants to bring that up in the right way. What they say is the shorts they're going to have 90% less shorts. Okay, but it's the same thing. It's instead of 10 $1 bills, it's one $10 bill. It's the same value. That's the first part. You're right in that it's going to be harder for them to short. Like, the reason shorts get to kick the can and stay in the game is why? Because they continually short. That's the only way they really get to kick the can, is they continually short and they suppress the price. That's how they do it. How do they do that? They got to create shares, find shares, whatever it is. But the problem that they're running into now is, number one, cost to borrow is skyrocketing. Cost to borrow, this is a protracted cost to borrow. When I first saw the first day of 200% plus for the average for cost to borrow, I was excited. I was excited for a minute, and I was like, okay, hold on. It's one day, 48-hour rule. But now we've seen it for multiple days. It's maintaining. And that tells me that there is a different kind of liquidity crisis. When Boss talked about liquidity crisis earlier, that's finding cash. I'm talking about liquidity crisis, and the shares are hard to find. Now, with the combined, with the floats the way they are now, and as much shares as there is now, if they're having a hard time finding shares now, imagine with 10 times less amount of shares. It's going to be ridiculous after a reverse split. Now, cost to borrow. Now, I like to think in percentages, because that's how the market really works. It's not about dollars, it's about percentages. Because if you put $100 into AMC and it goes up 10%, you've made $10. But the stock price is what? 5 or whatever it is, 4. But if you put $100 into Disney shares and it goes up 10%, how much did you make? $10. It's still $10. But the share of Disney is at what? 80 right now, I think it is. So it's about percentages. It's always about percentages. Raw numbers really don't mean shit. It's all about percentages. So these shorts are going to have way less shares to borrow. If the cost to borrow is 200% plus now, imagine with literally 10% of the amount of shares available for them to fuck us with. They're going to have 10% of the amount they have now. Theoretically, your cost to borrow in that regard could go to 2,000%. Now what are we talking about? Do you think they're going to hang on to their short positions at that point? I don't think so. I think they could fucking run for the hills before it even gets close to that. The reverse split doesn't just affect share price and the amount of shares. It's also going to affect the cost to borrow, because, again, everything is a percentage based.
Yeah, thanks for that answer. That's what I was thinking as well. It's 1,000%
Yeah.
more expensive for them after the fact.
Just to add to your guys' point, I'm sorry, Matt, I didn't mean to cut you off,
No.
my friend. But to add to your guys' point there, the ability for the shorts to borrow with 10 times fewer shares, like real, like actual shares. We all know that there's a bunch of synthetics and naked shorts and all sorts of shit going on. When there's that many naked shorts, where are they going to get these real shares from on the open market if retail's not selling them? Or even if retail is selling them and they need so many of them, we're going to be seeing repeats of January 21 and June of 21 with the same situation, except more volatile, with higher share prices, more expensive cost to borrow. It's going to be an absolute shit show. That you don't lose, people aren't going to lose 90% of their shares. The price of each share that you have, if the proposal passes of the reverse split, the price of each share would go up 10x. And if the number of shorts also goes down, 10x, that would not reduce their actual liabilities, right? You don't have to pay more just because there's a 1 to 10 reverse split. Just like the shorts don't lose or don't get money back if there's a 10 to 1 reverse split. They still have the same dollar amounts invested in their short positions, whether it be through their subsidiaries, whether they be naked shorts or reported shorts or unreported shorts or synthetic shares. It doesn't fucking matter. At the end of the day, the shorts are still fucked. And I don't suspect that the transfer from APE to AMC and a CUSIP change would cause a mother of all short squeezes, but I wouldn't be surprised to see it cause a serious short squeeze right off the bat, with the reverse split and then AMC being able to dilute and sell more shares on the open market. That would cause, usually has caused in the past and would probably cause the price to go up even further. Which would cause more shorts to have to cover, more broker dealers to have to delta hedge. And delta hedging, for those that don't know, means buying shares on the open market to hedge against call contracts going in the money. And if the shorts can't deliver on their shares, like I told people about in my live stream earlier today, then the prime broker or the broker dealer would have to go out there and fetch those shares if their hedge fund clients at a short can't find those shares on their own. And at the cost of the liquidation of the shorts, the people that are shorting, the actual shorts themselves. So yeah, I'm very much looking forward to it. And I've got about 100 different things running through my head that I'd like to explain. And 99 out of 100 of them are fucking bullish, as far as that goes, and the total dollar amount by the shorts does not decrease. But what does increase is the ceiling and the volatility and the FOMO and the institutions that would be buying AMC because their fundamentals have been repaired and the shorts are being squeezed, So I think it's a really good sign, Matt. Thank you for bringing up that awesome question, man. Well, I didn't mean to cut you off, though. Was there more you were going to add in there?
No, that was about it. I mean, I've been a listener from you guys for about 2 years, but the other thing I'm thinking is that for AMC to get healthy financially and pay off debt, it opens up the possibility of them doing a dividend at some point. And I think if they were able to do a dividend at some point, that blows this thing all up, especially if they're as heavily shorted as a lot of us think they are.
Hell yeah. You know what? As a matter of fact, my guy Pantheon AMC, which a lot of you guys probably know from YouTube and from Twitter, Pantheon AMC actually went out and spent hours compiling all of AMC's debt, their notes, all their subordinate notes and all their other debts. And he found out that in about 6 months, if AMC were to successfully do the conversion, reverse split, and sell some shares on dilution on the open market and get debt free, they could issue a dividend, right? And within the next 6 months, the final debt that they have, those covenants expire anyway. So even if it happens prior to that, say it happens in 3 months or 2 months, whatever, just throwing out a number, not trying to get people's hopes up that it's going to happen in X date. But if it happens sooner, then those debt covenants would be gone even sooner. And then that would allow AMC to issue a dividend, a cash dividend. Say it's 3 cents a share. Say it's 5 cents a share. Say it's 50 cents a share. Doesn't matter. If AMC's cash flow positive, it has no debt, they can issue that dividend. And guess who pays the dividend? The fucking shorts, right? The shorts got to pay it first. So that itself could cause more shorts to cover and more broker dealers to delta hedge as the price goes up, as more calls go in the money, et cetera. So yeah, man, I think dividend is a great point, dude, that a lot of people are not talking about because they're uneducated in the fact that I'm pretty sure Pantheon also told me, don't quote me, but I think their last dividend was in 2019. Yeah, I think it was in 2019 before COVID and shit, 2020. Yeah, it was in 2019, and I think it was like 3 cents a share or something like that. That was AMC's cash dividend. And even at 3 cents a share, that's a lot of money that would come out of the shorts' pockets,
Hey, Marcel, I got a question actually for you and AMC. ties in with what Matt requested, because if we remember in June 21, when we had the run up to 77 and 72, 77 in pre-market and 72 during, regular market, they also had posted the margin requirements, which went from 100% to 600%. And I wanted to know what your opinion or thoughts were when the whole, the conversion goes over. And yes, the very important fact that they're going to be reducing the float size and how much more pressure that would put on them for margin requirements. Because if I'm correct, that with the fact that they wouldn't have as many shares at the time before, AMC decides they want to put more on the market, right? That would cause more requests for them to put in more liquidity to hold their margin accounts when they're shorting. Clarify that if you think that's actually what would happen on a standard basis. I understand it's speculation until we see, but do you think that's going to happen again? Because that is one of the main reasons why we had a huge volatile run during that time. It was forced liquidation, putting more money into the margin accounts, the gamma, the delta hedging, and then we just had a huge FOMO at the time during the June 21 run.
Yeah, I mean, none of us have the magic crystal ball as to exactly how this is going to all run up. But the simple fact that just like you were saying, and like I said earlier, the reverse split places a different kind of liquidity crisis, not a cash one, but a share availability kind of liquidity crisis. And generally speaking, when you're talking about stocks and you're talking liquidity, you're talking about availability of stocks, like how how many are available to buy, to sell, to loan, to borrow, and this reverse split. I mean, by shrinking the float that much, and I think that's the main reason why, besides the price, but I think that's the main reason why Adam Aaron chose that 10-1 is because it's really going to put a lot of pressure on the shorts because they're going to have a lot less to work with. And like I said earlier, that cost to borrow, I think that's a thing that's been overlooked a lot is the cost to borrow now, but then 10x that, because if there's 10% of the shares we have now, theoretically, that cost to borrow is going to go up that much. It's really going to get crazy. There's going to be a tremendous amount of pressure. And, market makers, hedge funds, etc. Everybody always says oh yeah, they help each other. They'll never turn on each other. Bullshit. I'm going to tell you right now. A market maker, a bank, a hedge fund, they'll work together as long as it benefits them. But I'm going to tell you right now, if it comes down to one of them will lose a shitload of money to save another one, or one will go out of business to save another one, that'll never fucking happen. And that's when the margin calls start happening. And for anybody that doesn't believe we're making any progress whatsoever, look at everything that's going on. Look at the Evergrande, the Silvergate thing, like I just talked about with Boss, and you'll start seeing more and more stuff about that. Like silver is part of this whole thing, the economics of everything. There is so many things that are happening. FTX, all the crypto exchanges and the issues that they're having. If they were in control, would any of that shit have happened? No. I mean, it's I look at it that way. If they truly were in control, none of that shit. We wouldn't even know about it. We wouldn't have heard about it. It never would have happened. So I keep faith in that they're losing control. They're losing pieces, or shit is happening. We keep digging. We keep exposing shit. Sunlight's the best motherfucking disinfectant. I love it. Keep digging. Keep bringing shit up. Let's talk about everything. Listen to everything. Take it in. And something I tell my people all the time, and Boss will confirm this because he's heard me say it to him, is don't take anything I say, Boss says, and Boss Boss will agree with me, I'm pretty sure on this. Don't take anything Boss says, or I say, or anybody says at 100%. None of it. Instead, you use that as a launching point, as a starting point for you to do your own due diligence, your own research, verify it yourself. Go look it up yourself. Learn, grow, educate. That's why we're still here now, is because we educate, we share information, we learn, and we grow. We need to make sure we keep doing that. You can't blindly follow anyone, because that's going to get you in trouble.
Yeah, when I actually did my research, sorry, Marcel, go ahead.
Oh yeah, buddy, I just wanted to chime in real quick. It's like thinking to myself here is if the available shares are reduced by 10x, I want to be surprised to see the cost to borrow go up by more than 10x just based off of the volatility and the lack of available shares, as long as retail was smart enough to use cash accounts and not margin accounts, you know, and not allow the share lending program on their AMC shares and such. But go ahead, buddy.
I was just going to say, if I remember correctly, in May, I believe it was like 25th, 28th, that was when GameStop and AMC's margin requirements jumped up to the 600%. It was about within the week before the run up. And that's why I was kind of wondering if there was a correlation. That's why I had asked that question, because if I was correct, just looking at the charts and the cost to borrow was up, I think it went up to, at the time in the end of May, somewhere around 28, and then it just kind of jumped up on AMC up to the 60 or 70 or 90% range at one point. And that's also the time that the actual margin requirement had jumped as well. That's why I was kind of wondering what your thoughts were, because I anticipate that a lot of this is going to happen about the time either right before the full conversion of APE into AMC, or right after it's converted, just before the reverse split happens. Because again, lack of shares, you know, because shares are going to be reduced down by that 10%. And like you said, the cost of borrow is going to skyrocket, definitely. But I also think because of that, then lenders are going to be like, well, because it's how volatile it is, that they're going to require you to have 6 times, in this case, I'll use the example, 6 times the amount to be able to hold your margin positions open. And yes, you're right. I do not have a margin account. I will not use a margin account, not for AMC, not for anything that's heavily shorted, because of that particular reason, you know, them borrowing it when you have no choice on it, right? That's just my thoughts, and I just wanted to pass that between you guys and see how you felt.
I think there needs to be a clear distinction between the margin requirements for retail and the cost to borrow for, you know, shorts. Margin requirements, I think that you were mentioning for AMC were like the shorts, the margin requirements for, you know, retail shorts. And I do recall that going up previously to like 200%, 300% for AMC and GameStop. But the cost to borrow previously never went near 200% for AMC, for example, when we had those run-ups. And now we've been like, geez, it's been like a week and a half, maybe 2 weeks of the AMC cost to borrow being like around 230 to 250% average. So yeah, I think that this one's going to be a lot crazier, a lot more violent, and a much higher all-time highs than we've had in the past, even accounting for the reverse split. So yeah, I look forward to that. But yeah, that distinction needs to be made, I think, between the difference between the margin requirements for retail and the cost to borrow for institutions there. Previously, the cost to borrow for institutions never got near over 100%, at least not very high over 100. I don't recall. You said it was like around 80, 90%. And now we're looking at 235, 250% average cost to borrow on AMC. And I don't think GameStop's is anywhere near as high. Now, this is going to be an unpopular opinion, but GameStop's cost to borrow currently is much lower. And I believe that to be because of shares that are DRS'd. Now, a lot of people might disagree with me, and that's okay, you know, but I think that DRS is not helping. You know, DRS is not helping GameStop holders such as myself and others whatsoever. even though people like to pretend like it does because they've read on Reddit that it's going to fuck the shorts. I completely disagree, because even though you get a paper certificate and, you know, computer share can't lend those shares out to borrow, that doesn't mean that the book entry held on record by Seed and Company would not be able to be lent out via Seed and Company or the DTC, because Seed and Company is a subsidiary of the DTC. So I almost think that DRS is a way for shorts to get shares to borrow indirectly via Seed and Company, and they don't have to worry about retail requesting those out of DRS anytime soon, because they know that people that DRS their shares paid money to do it, and it also takes several days, and you usually have to, you know, mail in a form or call it in and get, you know, do some sort of electronic form submission, and then wait several days to get those shares. So that gives them a lot of ability. And even if that's wrong and that's not the case, the fact of the matter is that there's a lot more retail investors in AMC currently than there are in GameStop, even though the float is higher, percentage-wise. You know, the float being about 5 times higher on AMC, that's not sufficient to say that, you know, that doesn't, or should I say that it doesn't correlate with the number of retail holders on GameStop. You know, if you go and look on Twitter and Reddit and all this stuff, there's a lot of GameStop holders. But as far as, holders of GameStop per number of shares available, and holders of AMC per number of AMC shares available, there's a lot more AMC shareholders holding a lot more shares, probably a lot of them being synthetics, which doesn't really fucking matter because they've all been sold, and that means that every single one of them can be resold, even if there are synthetics out there, you know. So I think that AMC's got a much higher future potential. As an unpopular opinion as that might be to the GME elitists, you know, I'm not an elitist. I just go based off of what the facts tell me, and looking at the options chain, looking at the number of shareholders, I think AMC's got a lot more room to run. Let's put it that way. And the cost to borrow being so high on AMC and not being so high on GameStop, regardless of the reason, whether it's DRS or not, doesn't matter. Okay, don't get me wrong. I love GameStop and I own GameStop. But the fact of the matter is that the cost to borrow now on AMC is much higher than it's ever been in history, per my knowledge. You know, at least over the last 2 years, I've never seen it over anywhere near 200%. And I think that leads to a much higher possibility that we're going to squeeze in a ridiculous fashion. And we're going to see a lot of halts, and people are going to have to temper their emotions. And that means for the positive and for the negative. You know, I think taking profits can be healthy. I think people that don't take profits are the ones that fucking crying about the fact that the share price is so low. You know, I took a lot of profits off of call contracts back in June of 2021, and I bought a lot more AMC with it. I didn't hurt AMC by selling my call contracts because it was the market makers that were buying them. Who else has $6,500, $10,000, $20,000 for a single contract except for the market makers? Retail doesn't have 20 grand laying around to buy one fucking contract at 100 shares, but the market makers and the short hedge funds do, because if they can save $100 by buying that call contract as opposed to paying X amount on the open market for 100 shares, if they can save $100 or even $1, then that algorithm's going to do that, because it's all math.
Thank
But I
you so
digress.
much. I appreciate it. Yeah.
Yeah, brother, you too. I digress. Yeah, I think that was a great point you brought up. Sorry to go off on a rant there.
No. Everything ties together, because as we know that there's no point that doesn't actually lead to another, point, right? I appreciate you, Marcel. You know that, I've been in multiple, stocks together, not just BBIG, AMC, and GameStop. So, I just appreciate your insight, and I thank you for everything. But
Thank you too, buddy.
I'm going to
Appreciate
drop
your
out.
support.
And I'll talk to you guys mañana.
Good man.
Have a good weekend too.
You too, buddy. Yeah, if anyone, AMC for all, if you see anybody raising their hands, please feel free to bring them up, because I don't know what's going on with my shit, but I can see that some people were requesting, and I don't see anybody with their hands up. I think my fucking app is wrecked right now. I tried restarting a couple of times. Go ahead, bud.
Yeah, I don't see any hands up either. Weird.
Okay. That's cool. Yeah, if anybody has any questions, feel free to throw your hands up. There's no such thing as stupid questions. I'm not going to talk shit to you if you ask a question that you think is dumb. You know, I'm not going to call you an idiot. And I apologize if I've gotten frustrated with people in the past. It's just very hard to differentiate sometimes between a bot and a shill and an educated investor. And there's nothing wrong with that. You know, there's nothing wrong with not knowing everything that everyone else knows. You know, I look to guys like Dave Lauer and other educated people, not for guidance on AMC, but for education in market mechanics and such. And I think that that's important, and people need to take what everybody says with a grain of salt. So if somebody said something on Twitter or on YouTube and I deleted the comment and I asked a question like, what the fuck are you talking about? Like, that doesn't make any sense. I wasn't trying to be diminutive. I was probably just confused by the question and not knowing if this person is actually a real live person, like the majority of you in here, or a hedge fund shill, or just a bot out there copying and pasting the same reply over and over again. So feel free to ask anything you guys want. You know, I did send an invite out there to AMC Bigums if he wants to come up. I did send one out there to Tony DeNaro, but I understand if you guys are busy, if you're just listening in because you're hanging out with the wife or the family or watching a movie and you can't talk, that's cool. You know, you don't have to come up. No obligations, of course. You know, we're just hanging out. I'm just enjoying this night. I appreciate you, all you guys, Matt and AMC for All and everyone else who's come up so far to ask questions. I think it's real healthy to discuss these things together.
I can give you a dumb question, actually, because I don't know a lot
I
about
bet you
this.
can.
But just out of curiosity, I was just looking around because I was thinking, yeah, I had Robinhood for a while and still have a few things on it. And a while back ago, well, this is a long while back ago, they sent out a letter to all their people that had stuff on there saying they guaranteed that they had a real share for everything you had in your account. So I just thought, out of curiosity, I'd look at their financials. I pulled them up the other day, and it showed for the last year from, I think their accounting is from 10/21 through 10/22. They showed that they had over 1 billion shares in AMC outstanding. I don't know much about financial statements, if that's like a cyclical thing or, but that seemed kind of crazy to me. Is that a normal, or somebody that maybe knows more about this than I do can chime in?
Say that for me one more time. My apologies. Just in a more condensed fashion.
Sorry,
because
I just looked up
okay.
Robinhood financial statements for last year. And
yes.
when you pull up an individual stock, it will list outstanding shares for the year. And it said it had outstanding shares over 1 billion for AMC.
Is that's what their financial statement said? See, the thing is, you don't know if they're including AMC and APE, because APE is an AMC share, right? It's a preferred equity unit. They're probably referencing AMC and APE combination, which is 1.4 billion shares. I'm just assuming that that's probably what they were referencing. You know, that's what makes the most logical sense to me. I could be wrong. They could just be talking about AMC, but they're probably talking about all of the combined AMC and APE shares being around 1.4 billion, I'm guessing.
Okay, that makes sense. It was from, I think, 10/21 through 10/22. I think it's what
10/21.
Yeah.
Actually, that might have, I'm not so sure because you know, obviously the dividend came out 8/22. You know, 8/22/22, August 22nd, 2022. So that's kind of a gray area, right? You know, I don't know if they were talking about after August, after the dividend, or if they were talking about before August, you know, or all of them combined. That's a tough one, man. You know, in my personal opinion, there's probably shit. Again, unpopular opinion, but I wouldn't be surprised to see that there's, you know, 50 billion synthetic shares out there, you know, just between naked shorts and synthetic shares and ISDA contracts and futures and swaps and all sorts of other rehypothecations out there, and tokenized securities. I wouldn't be surprised to see 50 billion synthetic shares.
Sure. Yeah, well,
at
my
all,
thought
you
was
know?
if one entity or one broker has guaranteed all their clients that they have real shares and they're holding more than the
Yeah.
float in their allotment, then that's opening for a lawsuit, I would think.
Well, I'll tell you this much. We got into Weeble's API last year. API, for those people that don't know, is like an open door to get certain information between, you know, online programs and applications. And we didn't like hack it or anything. It's not, I'm not anybody special. If you get a link to an API, you can use it. And we got a link to Weeble's API somehow that somebody had shared to us. And I did a video and added up all the shares that retail held on Weeble alone. It took me about an hour to add them up because they're all, you know, in like a certain field, and it's really easy actually. So I went through and I added them all up live on stream, and it was last year. I think it was like around September of 2021. So it was, okay, sorry, it was a little over a year ago, September, October of 2021. And we came to the conclusion that Weeble alone held 28% of the entire float. And that's just one broker. You know, there are hundreds of brokers out there. Think about Weeble, Fidelity, Robinhood, Schwab, and E-Trade, and just keep thinking of all the brokers you can think of, and even more that you can't think of, you know, Moomoo, Public, et cetera. We could just go on, right? If we went through Weeble's API and were able to conclude that all those shares of retail in Weeble alone was almost 30% of the float, how much of the float do you think is actually sold? You know, like if you just use that as an average and just give say every other broker's got between 5 and 10%, you know, it doesn't even take 8 or 9 brokers to equal the entire float. And there's still 100 more broker dealers out there in which, you know, hundreds more, I should say, in which retail holds shares. And I thought, I was just blown away by that. I was fucking blown away by that fact that Weeble's such shitty security, that had such shitty security that their API link was so easy to find. And we were able to tap into it and just go through and see all the shares that they held. Just think about that. One fucking broker holding almost 30% of the entire float in shares that they probably don't actually have there. You know, they probably don't have those, you know, whatever it was, 200 million shares, 180 million shares AMC out of 516. This was pre-ape split, okay, pre-ape split before that occurred, before the dividend. So how many do you think have happened since then? Since how many people have continued to buy shares? At that time, I only had a few hundred shares. You know, now I got 5x shares and 4x contracts. And I'm sure a lot of other people can say the same as far as like the amount of money that they've put into it and the amount of shares that they've put up. So for Robinhood to say that their shares are back to 1-to-1, I don't fucking believe that at all. They're probably extremely over leveraged, especially considering the fact that at this point, almost half of Robinhood's income is coming from crypto, and the other half comes from payment for order flow.
What about the third half?
That's a lot of halves, bro. I think at this point, there's like 300 halves. Hey, what's up, Tony? It's good to see you, my friend. Haven't seen you in a while.
How you doing, Marcel? Good
Doing
evening.
well, buddy. Good evening. What's going on over there?
We are doing swell. We just got back a few hours ago from watching Megan, which was a good movie. Scarlett really enjoyed it. Hopefully some of you guys get to go see that this weekend.
Sweet.
I was going to
Glad to
ask
hear
a
that.
question. I was going to ask a question on another space call, but I got booted.
That's funny.
I
Was it banned space call?
I got brought up as speaker, and you know, I was on that call for 3 or 4 hours. It was an anti-reverse split call, but they were actually being pretty reasonable, and I enjoy listening to everybody's opinion, everybody's comments, everybody's questions. But I'll just post my question here, and also I'll be available if anyone wants to ask me questions.
Yeah,
Uh,
that's awesome. Go ahead,
di-
man. I'd love to hear it. And by all means, hang out with us here, man, as long as you want. It's always a pleasure to have you, Tony. But what
different
was your question?
different audience here, so I don't know if I'll be able to get an answer. But I really
Mhm.
wanted to hear from one of these guys that's against the reverse split, because I'm still trying to make up my mind. I'm generally against reverse splits, but most of the ones I get asked about are failing penny stocks. So that might be a different type of reverse split than what we're looking at here. Anyways,
Mhm.
everybody seems to be in the camp on that side of the table of let's just keep on diluting ape. Let's not do anything. Just keep diluting ape. Keep selling it, and let Adam Aaron raise money that way. And my question is for anybody: do you guys understand that when you dilute ape, you're also diluting AMC? And I'm gonna follow that up by saying, if you don't believe me, look at the income statement. All of the shares, ape plus AMC, are in the income statement when they calculate earnings per share using and there's a formula for diluted earnings per share. So every dilution of ape dilutes AMC.
Yes, sir. That's correct.
So
Go
so
ahead.
I'm just curious. I want to hear a good argument from someone who can really advocate for it. Why is selling ape? We're going to need billions of them, 2, 3, 4 billion more. Why is that a better dilution than a yes vote, where you just got to take 100 million or 200 million of AMC after a reverse split?
I think that's a great question.
Because
That's a great question.
either one's going to be dilution, and the
Mhm.
company for sure has to raise more money because we got a target on our back due to the debt. That's why we're being shorted. So I just want to hear, why is diluting ape for 60 cents a better option?
The only thing, let's look at it, like I'm going to step back and I'm going to look at it logically. All right. Like you just said it. Okay. A lot of people don't realize that the real value of AMC is not AMC shares. It's AMC plus 8. And that is the derivatives basket called AMC1. Right. And I know you, Tony, understand this, and a lot of other people understand this, but I know the majority of people don't. So when you're looking at the price of AMC, you should be looking at the price of AMC1, because that's the real value of AMC, right? It's AMC1. It's AMC plus 8 combined.
Yep.
So, and it's got to be a derivatives basket, because they're taking two assets, APE and AMC, and adding them together to come up with the real value of AMC, which is AMC1. So let's look at it this way. If we want to pay off $5 billion in debt, AMC is selling right now 167 million shares of APE to Antara Capital, right? And they're getting 100 million taken off their books, 100 million of debt written off. And I think they got like another 140 million or something like that in cash, right? Somewhere around there. I'm just kind of spitballing off the top of my head, but I'm fairly close, maybe off by a few million, but not a ton. So that's like $240 million for 167 million-ish shares of APE. Now, how many shares would AMC have to sell in order to pay off $5 billion in debt? They'd have to sell billions and billions of shares. So the dilution percentage would be greater than if they were to just do a conversion, a reverse split, and then, like you said, sell off 200 million shares at, $60 a share, or even higher, because when the reverse split occurs, the conversion, the reverse split occurs, like we've seen on a lot of other stocks, that the price goes up a lot in the short term. And if AMC can strategically sell off shares either to a hedge fund or on the open market, they would have to sell much fewer shares percentage-wise of the company of AMC than they would APE. And I'm not trying to pull a bull case for the dilution or reverse split. I'm just thinking as logically as I can possibly think, just speaking in math, right? Speaking in figures. So I don't see any reason to do it other than the fact that people are either A, not understanding that the real value of AMC is AMC1, both those assets combined, APE and AMC, or they're purposely trying to mislead the community
into thinking that APE is not actually AMC, which it is. They're preferred fucking shares, right?
They all go to the same exact income statement.
Yeah, exactly. The same income statement and the same percentage. Added up,
And they all
1.4
have
billion.
They all have an equal vote. They're the same fucking thing.
Yeah, exactly. It's a rose by any other name is still a rose, and it's the same thing we're seeing here. And so that's what really pisses me off, is that not what you said, but like the fact that people are pushing for a dilution of APE at $1.30 or 66 cents or 250 or whatever the fuck APE could be, when they could just put them together, do a reverse split, and then sell some on the open market for 60, 70, 80, $100 a share, and have to sell a much smaller percentage of the company to those big bad institutions that so many people are scared of. It makes no sense to me when you look at it logically. And if anybody would like to say otherwise, please raise your hand.
Yeah,
I'm not seeing it.
If there's somebody that can provide a good case of why selling, because I think if we vote no, if the no votes carry it, you'll see a pretty immediate announcement from AMC that they just went ahead and authorized 3 billion more APE because they have no choice.
Right. You know what, man? Sorry, go ahead, please.
The CEO is planning out 12, 24, 36 months. He's not going to sit, risking the next 12 months with 500-600 million in cash. And we all can be bullish on the company and think that next year is going to be great. We can do that as retail, but a CEO and the executive suite are planning for all contingencies. They're going to want more cash. So there's going to be something sold. We just have to vote which one we want. So I guess that's really what I'm telling people to think about. Do you want billions of more APE sold below $1? Because it will go back down below $1 if the vote fails. The only reason APE is going up is because of the conversion possibility, in my opinion.
I agree. The possibility of APE converting to AMC in the reverse split,
right.
Just that tweet from Adam Aaron made APE start running up and AMC start getting shorted down more to kind of bring a little bit more equilibrium there. I think a lot of shorts, not a lot, but I think some shorts started covering those positions, and hedge funds purposely tried to close that gap a little bit to prevent retail from buying a larger number of APE, which, as we know, if this passes, would be converted into AMC. So I think that they're kind of worried about that fact. I really, really do think so. And I wanted to say something else to your point, but go ahead, AMC for all. I heard you pop in here for a second.
Yeah, I mean, when APE splintered off, realistically, AMC and APE should have traded for around the same price to begin with. And the hedge funds knew that APE was going to be used to raise capital, to basically crush their short thesis. So they attacked APE. And that's why there's this giant disparity between the two. Just to both of your points is that we're going to dilute one way or another. And you've got to wrap your head around this. One way or another, whether the vote is a yes or a no, we're going to dilute. Do you want to dilute APE that's shorted into the stratosphere all the way down into the ground, and so we're going to have to do billions and billions of shares? Or do we merge, combine, get that equilibrium back, get a higher price? You're going to see, chances are you're going to see the price go up even a little further after the split, which typically is something that does occur. And then dilute there. That's smarter dilution. And here's the other part. There may not even be massive dilution right after the reverse split anyways. I mean, I imagine there will be some, but companies carry debt all the time. And boss, I wanted to ask you this. The covenant about dividends, because that's the short killer, dividends. Because they have to pay for every share they're short, they pay the dividend out. So if we vote and say, hey, we want a $10 dividend per share, every single short share pays that $10. Every single share that's short, they pay that $10. So that's really the killer. Is the covenant that they have no debt, or is the covenant that they're profitable? Because I think it's that they're profitable.
Neither
Now,
one, actually. I'm sorry, I didn't mean to interrupt, but the
okay,
covenant is just part of their agreement. Part of the covenant of these debts, these lien notes, prevents them from selling it. They don't have to be neither profitable, nor do they have to be debt free, but just they have to be free of the covenants of those agreements. And they
okay. So
pretty much are going to be paid off or expired in about 6 months, but they could just go ahead and get ahead of that, and by paying off those specific notes.
right, those
The,
specific liens. Now,
let me let
that
me
doesn't
let
that
me
may
add
not be the
something.
whole $5 billion in debt, though. That might just be a smaller portion. Obviously, it's a smaller
Yeah, they
portion
don't
of
have to pay off all of the debt. I'm just
right.
thinking it would be pretty damn easy for them to pay off all the debt, period.
True.
Mm-hmm.
Let me add something to that real quick. The covenants have a liquidity requirement to them, so AMC has to maintain a certain amount of liquidity. That is the main thing. But yes, they don't have to pay it all off right away.
This is very true, Tony. Thank you for reminding me. You're absolutely right. They have to have a certain amount of cash on hand. You are completely right.
I just want to hammer the point home because people aren't hearing it on the other calls that APE is dilution for the entire company. You are not escaping dilution on AMC when APE is being issued. So if you want billions of more apes and you're okay with that and you understand that it's also diluting your AMC, then you can vote no. But no one's talking about this. I don't understand it. Like they think that ape is just some separate entity and go ahead and sell billions of them. That's fine. It all comes home on the financial statements, and every one of your votes is being diluted every time they issue billion or 2 or 3 more ape. Everything, it's dilution by every way you measure dilution, from earnings per share and votes.
Maybe their thought process is this. I'm just trying to devil's advocate for you here a little
Yeah.
bit. Maybe try and suss it out. Maybe their thought process is, hey, dilute ape into the stratosphere. If we never vote to convert it, it doesn't matter. Maybe that's their thought process. I mean, I know it doesn't make 100% sense, but maybe that's their thought process.
That could be their thought process, but that is because they are deluding themselves from the fact that it is dilution on the earnings statement and in votes. And those are the 2 ways you measure dilution. Doesn't matter if you convert it or not, it still exists. It's dilution.
Yeah, bud, you're preaching to the choir, man, and I'm glad you're saying it because I'm tired of saying it. I'm tired of saying it over and over again, and people aren't either believing or understanding. But the fact remains that it's on their balance sheet, and diluting more ape is not better than diluting less AMC if they do a conversion.
Well, simple fact of the matter is with a conversion and a reverse split, you're going to end up, okay. Let's say we want to pay off all the debt. If we were to do it with just diluting ape, and then let's say afterwards, let's say we dilute ape to pay all the debt off, and then we merge and then we reverse split, we would end up with more shares at the end than if we merge, reverse split, and dilute at that point. That's kind of the thing I've been talking about in my channel is if we dilute after the reverse split and the merger, we're going to end up with a smaller float than if we just dilute ape into the stratosphere and eventually merge that in, because it's going to merge in at some point.
Which are you saying is better?
For me, my thought process is, okay, if we're going to dilute no matter what, I want to dilute as smart as possible, and I want to do it and cover what we need to cover with the least amount of shares possible. If you dilute after the merge and the reverse split, the math is going to tell you that it's going to take less shares to get what you need covered.
Yep.
And I think I should put the math together and do like a big friggin' DD post on it, break out old paint on the computer, which is that's something I do in my channel. But break it out, and I mean, it's really that simple. If you dilute Ape to get everything paid off, and then eventually it gets merged and split and everything else, you're going to end up with a much larger float than if you do those things first and dilute after. Just because of the disparity between Ape and AMC right now. If they were now, here's the difference. If Ape and AMC were trading at the same price right now, I would have a different argument, but they're not. Because there's that arbitrage, because there's that price discrepancy between the two of them. That's why it's smarter to merge, split, and dilute after. But if they were trading at the same price now, I'd say it doesn't matter. You're going to end up with the same result.
The other tangent to that is because Ape is a separate instrument that is designed for dilution, like either you or Boss said earlier, they are purposely attacking it to drive it as low as possible and kind of handcuff AMC. And they have less ability to do that when it's back to one instrument if it's just AMC, because then they dilute the whole market cap of AMC to something so ridiculously low that it would be a screaming buy.
Not to mention, people don't realize that they're now currently manipulating AMC and Ape and AMC1, and all these things make it more expensive and create more shorts. So now you got not even double, but more like triple the short positions, because the derivatives basket AMC1 can be shorted. They can take out calls and puts to create a divorced puts and a married call situation on AMC1 with Ape and AMC, because Ape doesn't have its own options chain, but now Ape can be manipulated, AMC can be manipulated, and the AMC1 derivatives basket call contracts can be manipulated too. So there's more room for fuckery now, which in my opinion increased the number of shorts, synthetic shares, naked shorts, rehypothecations, and all that's going to be better for us in the long run when it squeezes.
Preach.
Well, I hope we have some lurker that can come up and give a compelling argument to my question.
Yo, Marcel, Bruce, how you doing, bro?
Good, buddy. It's good to see you.
You too, my man.
What's going on, dude?
I got a question. Somebody maybe can, better answer this. So, for the last short while, there's been, the Citadel security sold not yet purchased somewhere north of 65 billion or something like that. So, when it comes to the cusp change, the info going around is they have to close their positions, right? So what, and again, this is something that maybe you guys know better, so why I'm asking. What's stopping a short position or market maker putting those short positions on securities sold not yet purchased during a cusp change and just quite literally leaving it there? The same that, was it JP Morgan's like 100 billion, or Morgan Stanley? I can't remember. It was more than Citadel. I'm just giving you an example. So maybe I got it wrong, but if you guys have a better idea how that works, just to shed some light, because it's kind of going around, people are talking about, positions sold, not yet purchased. So can that have an effect during a cusp change?
Yeah, and one thing people don't understand is that when a CUSIP, CUSIP, whatever you want to call it, when a CUSIP changes.
Sorry, yes, CUSIP.
It's okay. No. You can say it however you want. Whatever, it's just an acronym anyway. So when you have this CUSIP number change, not every short position has to cover. Only naked shorts need to close their positions during a CUSIP change. And then they could take out new shorts on the new CUSIP. But regular shorts can just roll to the new CUSIP. They can cover and roll to the new CUSIP. But naked shorts, naked shorts can't do that because they don't have a borrowed share in order to roll, in order to sell or to return, I should say, in order to return it and then cut and then move on and then short the new CUSIP. So the naked shorts do have to close, but not every short position has to close. Does that make sense?
Yeah, actually, yeah, it does. Thank you for that.
Yeah, no problem.
Essentially, and I don't want to spread hopium, but it sounds like before the CUSIP change or before the conversion, it's possible there could be a run.
Oh, I'm expecting it. I expect it because those naked shorts have to close. And if not, then they have to borrow shares. And with the cost to borrow being so high, the people that are borrowing shares, the broker dealers and shit, and the prime brokers that have shares, BlackRock, whatever, if they lend out those shares, they're going to command a premium. And that's going to be more expensive for the shorts, right? So it's more difficult for them to maintain their positions first and foremost. And then the naked shorts got to close out. Be right back. 1 second.
Okay.
Yeah. So did I answer part of your question or did I miss part of it?
It's just,
Okay.
I like to be informed, and I think everybody does too. That's why I think these space calls are really important because, there's messages going all over and whatnot. So I really like these space calls. It really gets information out there. So just in regards to that, who's going to enforce these naked shorts to be closed during a custom change? And what?
Oh, that would be the broker deal. I'm sorry, I didn't mean to cut you off, but it would be the broker dealers or the lender of the shares, right? Because there's only so many shares out there, right? And hang on, my kid's being a little crazy right now, so she's kind of distracting me. But to put it simply, when there's a CUSIP change, shorts that have shares that they've borrowed, those can be returned, right? And then they can just take out new shorts on the new CUSIP. But naked shorts don't have a share to return. So they have to go out and fetch a share. And because they have to fetch a share, they either have to get it from other institutions that have shares or rehypothecated shares, or go to the market and buy new shares to return them to the broker dealer. So it's not like the SEC or FINRA is going to be closing out naked shorts. The broker dealers doesn't even know which ones are naked shorts and which ones aren't, most likely. They just think that they have shares. As long as they have reasonable, plausible deniability, reason to believe that the shorts are legitimate, then they're in the broker dealer's eyes, they're fine. And that's a lot of the problem that's going on with the short reporting only having to occur every 2 weeks, only twice a month. That's why Thomas Peterfy of Interactive Brokers was saying that in order to fix this hole with the system, this giant problem with the system as far as short reporting and short interest, the only way that could be fixed is by forcing shorts to report every single day. And we know for a fact that shorts only have to report twice a month. That gives them 15-day period in there to do whatever the fuck they want. So it's not like SEC and FINRA is going to cause naked shorts to close. It's that the broker dealer is going to want their shares back. It's going to want the shorts to close out the positions on that old CUSIP. Therefore, whether they're naked or not, the broker dealer doesn't know. They just want the CUSIP shorts on the old CUSIP to be closed out. Does that make sense? And if they don't have a share because they're naked short, then they have to go out and fetch a share. And that's going to cause the share price to go up, which causes delta hedging by the broker dealers and gamma squeezing and calls going in the money and FOMO buying and so on, like that vicious cycle that we saw the last 2 times.
Right. No, that makes sense. And I appreciate that. And I guess I do have a few more questions, if you don't mind. Do you see?
No, I'm actually really enjoying this. Please keep them coming. And AMC for All and Tony, feel free to jump in anytime. I'm loving your questions, Bruce Wayne.
Awesome. Do you see? I mean, listen, we've been here a long time, and rightfully there are some people frustrated. I mean, that's the whole goal, right? Is to get people frustrated. But I would arguably say majority of people are still holding, right? and being very optimistic. So that being said, do you see a scenario where they find a way, I guess you could say, not to cover or close these naked shorts, and if that's even something they can find to do, just because they've been fucking around for a long time. They always found a loophole. They always find some way to fuck around. Excuse my language. To some people are offended, but you know, is a scenario like that possible? And if it is, how would they do it? Does that make sense?
Yeah. First thing though, have we been selling? That's a question that gets asked a lot. That's a question that's something that gets spread a lot by people who are trying to cast doubt or whatever, and sometimes it's even stalwart AMC patriots, so to speak, are like, geez, are people selling? And the psychology of how they make the stock price move is to make you think that. But what I want you to do is, if you have any charting program at all, like even if you don't use Webull to buy or sell anything, or of course do whatever you want. But Webull uses payment for order flow. But if you download Webull, they have a very good charting program in there. I use that for charting. I don't do any buying or selling in there, but I use the free charting. It's nice. But look at OBV. Look at the on-balance volume. And that will tell you all you need to know about whether we are selling or not. We're not. We're just not selling. Period. And compare it to other stocks that have seen like a decrease like AMC has. And there's a lot of stocks you can look at, like Amazon. I just looked at Amazon recently. I mean, it's been on a downhill since July of 21. Sounds familiar, doesn't it? And you look at the OBV on Amazon, and people are selling that shit. They're getting out. If you look at AMC, and that OBV is just as straight across, that tells you all you need to know. They give us some data, nowhere near enough data to make the best decision we possibly can. And that's one of the things we're fighting for here. Is we're fighting to get the data that we need, that they have 100% access to, that we only have 40% access to. But OBV is one that I use to see, are we really selling? We're not. We're not selling. Nobody's going anywhere. And I can't think of. I'm all over the place. I'm in Twitter. I'm on Telegram. I'm in Discords. I'm in the Reddits. I'm all over the place. People aren't fucking selling because they're not. So, as far as what kind of fuckery they could do, I'm going to use those words, boss. I hope you don't mind. I know you don't care, but other people, whatever. But if they're going to do fuckery, they're going to do fuckery. But the simple fact of the matter is there gets to be a point where liquidity becomes the problem. It's not whether they can kick the can, because kicking the can, everybody needs to understand that kicking the can costs money. You can't just kick the can down the road for free. That costs them money. If they're doing algorithmic, like nanosecond trading, trading for fractions of a penny, lower and lower and lower to drive the price down, they do that. They do that algorithmic trading, but that costs them that fractions of a penny. And that doesn't sound like a lot, but it does add up, especially when they're doing it at the volumes that they're doing it. So it costs them money. All these shorts and the cost to borrow and the interest rates and all that costs them money. Hiding and burying, with the married puts and all the other bullshit shenanigans that they do, all that shit costs them money. Now, if they're making money, that's a cost of doing business, and they'll do it. But there gets to be a point where the cost of doing business outweighs the money that they're making. That's where they get fucked. And that's where this liquidity crisis and what Boss always talks about, the market crashing, I agree with him. The market has been crashing for a while. It's been a slow fucking burn down. And look at any major anything from July of 21 to now, and you'll see it. that's what's going to kill them eventually. Is it's all this liquidity drying up. The FTX, that was liquidity that dried up. The Evergrande paper, whenever that Evergrande finally goes into actual, real, legitimate bankruptcy, all that paper they use as collateral for their margin accounts is going to become worth less. And when that does, that's just another straw on that camel's back, and eventually that bitch is going to break. So that's my thought on all of it. I don't know, boss Tony. I don't know what you guys think on that.
I appreciate that, man. Thank you. Like I was saying, it's good that this information gets out there so people understand what's going on, because some of the comments, going around just aren't clear. I mean, I wish there were a lot more people in the space call, but it is what it is. Just if anyone wants to add to that, please go ahead and cut me off. I just have a question to add to the cost of doing business. So I just noticed there was a post up here. Marcel, you posted the average cost to borrow for AMC is 255%, which is huge. Now, maybe I'm wrong, and maybe you guys can answer this. Maybe you obviously know better, but that's an annual percentage. So,
Yes,
so
sir.
if you
It's APR.
right, so if you broke that down, what is that, like 5 or 6% a week? Now we're up against these guys that have a lot of money, right? So is that still a lot when you consider breaking it down to a weekly basis?
Well, here's the thing, though. You said it's only 5 or 6% a week, but those shorts that they're holding on to, those borrowed shares that they're holding on to, only make money when the process is completed. Like those borrowed shares, they only made money when they first, so like a short, for anybody that's in the space that doesn't exactly understand how a short works, it's essentially this. Bruce, I'm going to borrow one of your shares. Right now, the share price is $10. I'm going to borrow one of your shares, and I'm going to go on the market and sell it for $10. I'm going to wait for the price to drop down to 5, buy one, and then return the share I borrowed back to you. That's the basic process of a short for anybody who doesn't know. I'm sure most of you do, but I want to explain it in case somebody doesn't. So here's what's happening. The situation we're in now is, Bruce, I'm going to borrow your share at $10 and I'm going to sell it for the $10. So I've front loaded that $10. But at some point I have to buy a share and return it to you. But I haven't done it, and I'm just holding on to this share. So Bruce, you tell me, you say, hey AMC From, you borrowed that share a while back from me. You haven't returned it yet. So I'm going to start charging you interest until you return that share to me. And you say, well, let's go with 5-6% a week. So after a while, the amount of interest I've paid you is more than what I sold the original share for, on top of the fact that I still got to go out in the fucking market, buy one to return to you at some point. So this whole understanding, the cost to borrow, when the cost to borrow was like 1%, they weren't hurting from that. That was great, because you're talking fractions of a percent, weekly. But now with this kind of cost to borrow, they're bleeding, and they're bleeding hard. They cannot maintain a cost to borrow like this for long. They can't. They just can't do it.
Yeah, I have to agree with you on that. It's a small percentage when you think about it in the terms of like, oh yeah, but that's APR, and the thing is, like, shorts have to pay to maintain their short positions, and all I have to do is nothing. I don't have to pay to sit and go and live my life, enjoy my family and friends, and work and take care of business and earn more money and buy more shares, long calls, all that shit. It doesn't cost me a dime to fucking sit here and just hold. But at the same time, it's costing them, now, like you said, like 5% a week, or a day, a week, let's say like 5% a week, when previously it was costing them 0.0001% a week to short the stock. So they've only got limited liquidity, even though it might be massive amounts of liquidity. They're only going to be willing to lose so much money, and their prime broker, the lender of the money to the shorts, or the broker dealer, one way or another, whether the broker dealer wants to keep upping the cost to borrow for them to make more money off of it because it's more risk, or because it's harder to borrow, or because the prime broker believes that you're no longer within your margin position. These guys, these hedge funds and family offices can be margin called in the same way that retail gets margin called. So the difference is, retail has maybe a few hours at best to do a wire transfer into their account or to sell some other assets in order to bring their margin position to good standing. Whereas these guys get, a few days, maybe a week, in order to, actually put that money in the account, and they can negotiate. Retail can't really do that, so they're greatly at risk. And every week that goes by with these really high cost of borrows, that's a good amount of money for them. And it's a good amount of money at $5 a share. Imagine what it's going to be when there's only 140 million shares instead of 1.4 billion after the reverse split. And now they're not paying 250% APR on $5. They're paying 250% APR on $60 a share or $55 a share. It's much more expensive.
What about the raise in cost to borrow because there's less shares? So
exactly.
Now they're not paying 250% on that $60 a share. Now they're paying like 1,500, 2,000%.
Exactly. Yeah, you actually went right to my next point, and that's like not even accounting for the increased cost to borrow from there being 10 times fewer shares available to borrow, hands down. So it's really gonna, force the market makers to sell more, short exempt, and the shorts to pay more on the cost to borrow to the broker dealers and whoever they're getting shares from. So it's a slippery slope, it's a slippery slope here for these guys, and they're going to maintain this for as long as they fucking can. I can assure you that, but yeah, they sold these things short at much higher prices, and down at these low prices, now they've got to buy. And not only do they have to buy shares enough to return to the lenders, broker dealers, or whoever they got the shares from, they're going to buy extra because they know that them buying shares is going to run up the price. So they want to make money on the way down and on the way up. These hedge funds don't just make money shorting, they make money going long and shorting and everything in between through any kind of arbitrage they can. I think that was a great point from you, Bruce Wayne and AMC.
Thanks, guys. I do have a few more questions. I don't want to take away from anyone else who wants to ask. And it looks like
I'm not seeing any hands, bro. So
okay,
keep going.
All right. I actually got 4 more questions, making the space call very interesting.
Cool, man. I love it.
I just wanted to comment on the OBV. Yeah, I did notice that, and that actually gave me a lot of confidence that people aren't selling. And you mentioned Amazon. Yeah, actually, it's funny because I did look at that, and yeah, it's clear. And even with, I think we can agree the limited data we have compared to the big guys, it still looks like nobody's selling, so which is really good. So my first question of the 4 is there was a reverse repo recently, and Marcel, I'm not sure if you posted this or somebody else. I'm just going off memory right now. So it was on the bottom of this, it said 3.5 billion wasn't returned out of the total of this reverse repo. And excuse me for the lingo, but I'm just trying to remember here. So can you tell us what that means? Like, that's obviously not good. Like, somebody's defaulting, if that's the proper term here.
after this question, let Jake go, and then you can ask more questions, please, because I do see that Jake's got his hand up.
Yeah,
But
perfect.
to answer your question, this is a tough one. And I saw that Robert, I posted the reverse repo that day via Lit Exchange. And then at that time, there was no information on the bottom regarding the trades, $3.5 billion worth of trades that had not settled in the reverse repurchase operation. But later the next day, or later that day or the next day, it did pop up on the New York Fed website at the bottom, and I went today to check it, and it is there now in the notes section, and it says that off the top of my head, $3.5 billion in securities were not accounted for in that because the trades hadn't settled. Now, that could be a few things. It's either, I don't think that it means what people think that it means. I could be wrong. It could mean that they failed to they failed to not deliver. I guess you could say that they failed to deliver something, or that they defaulted on that. But I don't really think that that's what it means. I think that $3.5 billion in unaccounted funds was simply a trade that had occurred via the reverse repo, via an asset that had not yet settled. So I don't necessarily think that that was a failure or a default on somebody's part. I'm hypothesizing and theorizing that it was more a trade that occurred via one of the counterparties that had not settled by that 1:15 p.m. cutoff time. Does that make sense?
Yeah, it does, and I
I
appreciate.
guess what I'm saying is it might be a nothing burger, but it might be something. And I don't know yet. I'm still trying to look into that more. And I think I'm going to reach out to Joseph Wang, also known as the Fed guy. I'm pretty sure his name is Joseph Wang. And the Fed guy, he's a former Federal Reserve banker, basically. And I'm going to ask him and see what he's got to say. But I'm pretty sure he's going to tell me that it's just like a trade that had yet to settle, so it didn't reflect on that 2.2 billion that day, or the 2.2 trillion dollars that day, and it was actually 3.5 billion higher than was listed on that amount. Again, I could be wrong, but I'll reach out to him and see what he's got to say and give you an update if it's anything, if I get any conclusions.
Thanks, bro. Yeah, that'd be really great if when you find out, if you could just post something or even DM me or whatever you want to do. I'd appreciate it.
Sure, you too, man. Yeah, Jake, go ahead, buddy. If you had a question, I don't mean to keep you waiting.
For sure. Hey, thank you for bringing me up. I've been having a very hard time processing what's going on since 12/19. The announcement that was made in regards to the sale of Ape and the 12/22 Antera deal. I would like to know your thoughts and why you think this is not an institutional takeover, along with the appointment of 2 new directors to the board on 12/29. What signs do you see that suggest that this is not an aggressive move by institutions to take over voting power and control of the company going into the annual meeting?
Well, the good thing is that Antara and AMC have an agreement, and on the 8K, it shows that Antara agreed to hold those 167 million shares of Ape until the proposals come up for a vote, and that they will be voting in favor of the proposals. This is bullish because Antara wants to make money off of Ape, and they understand that if there's a conversion and a reverse split, that the stock price will go up, most likely a lot more than just the 10x related to the reverse split. And that would allow them to sell their shares of Ape, and at that point they'd be AMC, to sell their shares of AMC for a significant profit. Also on the prospectus,
section 2.03, I think, section 203. I was showing it on my stream on YouTube earlier today. Big shout out to my guy Cash Money for pointing this out to me. Antara actually has, let me wrap back around to my point. On the prospectus, Antara has, there's a portion of it that says anti-takeover regulations, right? And AMC has agreed in this prospectus not to, what's the word I'm looking for? Not to use or abide by the regulations that would prevent their internal shareholders, their insider shareholders like Antara, from selling their shares for 3 years. So because AMC is purposely not going through that regulation, it gives Antara the ability to sell those shares of AMC after the reverse split at any moment. They could sell them immediately after the reverse split, which would put more shares on the market, probably, you know, possibly running up the price even further for themselves and for everybody else involved. So it's a quid pro quo. Adam Aaron gave him a good deal on 167 million shares, you know, for 66 cents average. Antara, in return, is going to be voting yes with those 167 million shares to vote yes on the conversion or reverse split. And then AMC also, you know, in return, is going to get a higher share price and the reverse split and conversion and all that shit. They would, hang on one second, it's pretty complicated. So Antara would be voting yes. AMC gave him a good deal at 66 cents a share. AMC then stated that they will not be abiding by the regulations that prevents Antara from selling within 3 years. Therefore, Antara, after the vote and the reverse split, would be able to sell their shares, thus reducing the percentage of shares that they own. And then, because the stock price would be probably much more than 10 times higher because, you know, FOMO buying and other shit going on like that, then AMC would be able to issue a dilution to pay off some more debt at a smaller percentage of AMC shares sold than if at, you know, 60, 55, 60 bucks a share or higher than if they were to continue to sell ape shares at a dollar a piece. So it's like a big quid pro quo in that, you know, like I help you, you help me. I tell you something, you tell me something going on. And both parties have ample reason to do what they promised. In addition, also in my stream, big shout out to, you know, Alessandro, I don't know if he's in here right now, and to Cash Money for telling me this earlier today and helping me see the light here. Antara is a company that is event driven. They make money based off of events, right? And previously, 3 times, they have had a situation in which they were party to ownership in a company, much in the same way they will be now with AMC and Ape shares, when a combination occurs. And a combination could be considered like a merger or a buyout or an acquisition. 3 times. So that's 3 times that I know of. There's probably more. And every time that happens, you know, with mergers and CUSIP changes and acquisitions, combinations and buyouts, it causes price run-ups, like serious fucking price run-ups. So that gives Antara even more incentive to be part of the deal if there's a backdoor, like a handshake on the back end happening between AMC and Antara. They go, okay, you vote yes with these 167 million shares. We'll let you sell your shares at any time. You know, we'll give you a good deal for 66 cents. Ape and AMC will run up hard. We'll get the conversion. We'll get the reverse split. And then AMC will do a merger, or we'll be bought out by another company, or we're in talks with this company to do this combination of our companies. And then therefore that would cause the stock price to run even more, making Antara Capital even more money. And then they could sell off their positions to somebody else. And AMC could potentially use some of the money that they make to pay off their debt, and even to buy back some of those shares from Antara. So it's a lot of quid pro quo and handshake deals going on here,
more than retail's really understanding. And a lot of people just see it as like, oh, now an institution owns, 18% of the float. What the fuck? It's like, yeah, but they're going to sell that for a big fucking profit. And Terra doesn't give a shit about owning AMC. They just want to make money and move on to the next one. And AMC just wants to use them to make money and get them to vote yes on the on the proposals so that AMC can make money. And if AMC makes money and Antera makes money as a byproduct, I'm going to fucking make money because I got shares and calls. Does that make sense?
Yeah, that makes sense. What about ownership? So money's good and all, but if you don't own the company, you don't really have a say with what happens with the company in the future. So in terms of who owns what are your thoughts on who owns this company? Who's gonna load up on shares during this time of volatility that's gonna happen. It's gonna, when things like when a split, conversion and increase in shares occurs, there's gonna be volatility. So you have algorithms that will come in. You have institutions that maybe sold off their stake in AMC in May, June of 2021 that see it as a very good value, to buy in very aggressively against retail, right? They're prepping to buy these shares. What are your thoughts on who owns AMC and what institutions are going to be doing in the near future here?
I mean, I don't know who's going to buy AMC shares. You know what I mean? But the thing is that if Antera is helping out and they're able to make so much money off of combinations and such, if they make a shitload of money on this, and let's just say theoretically the share price goes up to $80 a share or $100 a share, and AMC pays off a bunch of their debt through some dilution, then they could sell the company if they want to anybody that they want, right? And it could be literally anybody. And if that happens, they'd be buying the shares from Antera, they'd be buying them from AMC, to take over a majority ownership, to get seats on the board, to get decision-making capabilities and such. So it doesn't really matter to me who it is, like previously it was Wanda Group, now it's Antera and other companies. Like, that's business on the open market, on the stock market. So I can't say who it's going to be. I'm just not really concerned about it, because either way, Adam Aaron's the CEO, and if that changes, great. I'll assess that at the time, of when that occurs. But as of right now, I don't see any reason to be concerned about who could potentially be buying AMC or AMC shares. I would be ecstatic if there was a buyout and a merger and a combination, because then we would have, if we have AMC and another company merge, we would have a whole brand new, QSIP, and a whole, and the shorts would have to close out a lot of positions, and not just naked shorts, but actual, just regular short positions would have to close out of the old company, causing a run up in the price. And then if they want to, then they could short the new QSIP, but that would be different in a combination than it would be just from APE converting to AMC QSIP. You know what I mean? Like, the rules are a little different there, that with combinations and mergers, than they are with a conversion. So I guess that's not really a big concern of mine, because institutions will always own a good percentage of AMC, and I'm less concerned about them owning AMC post reverse split, because AMC would be diluting a much smaller percentage of the company than if they continue at the current pace of diluting APE at $1 a share to pay down debt, when they could be diluting much fewer shares at 50, 60, $100 a share to pay off some of that debt, and at the very least to pay off some of the debt that the covenants are preventing them from issuing a dividend, and to, like, as Tony said, to make sure that they maintain sufficient liquidity in order to be able to issue a dividend. And then guess who pays that dividend? The fucking shorts. So
I know it's kind of complicated. I know I'm probably ranting a little bit, but that's because there's a lot of possibilities, and I'm just trying to explain it as simply as possible without overcomplicating it, even though I probably did overcomplicate it, and I apologize if I did.
Well, and one simple thing, to talk about like a hostile takeover, basically of AMC or an institutional takeover of AMC. I don't know if you guys recall, but there was this stock purchase by this guy, this Elon Musk guy for Twitter, and like when all that happened, like he stated his intention. Like you can't just go buy a whole shitload of shares and like sneak in and fucking take over a company. It's just not how it works. You have to come out and talk about it. You have to. I forget that there's forms you got to file. There's all kinds of. We would know if that was the intention of any institution because we have so many people digging into the paperwork all the time. Like if something like that was on the table, we would know about it well ahead of time. I don't think that's what's happening here. And institutions, I mean, they're already 26% institutional ownership in AMC as it is now. So, I mean, that's a normal thing for any company is to have a lot of institutional ownership. Um, but I mean, that's all stuff we want to talk about. This we want to think about this stuff. It's good to have that knowledge and that information. And Jake, I definitely appreciate you bringing that up. Boss, we get a line of people now. You ready?
Yeah, why not? But just
All
one
right.
more thing, like you were saying there, as far as institutional ownership, if you got 26% institutional ownership, 5% ETF ownership, 85% retail ownership, 5% insider ownership, and 22% short interest ownership, where the hell did all these shares come from?
It's only 168% of the
Yeah, and
shares.
how
I mean,
could that be
whatever.
if there was no synthetic shares? How could it be, right? It's impossible.
Bingo.
Yeah, bro, that's a
Bingo.
great question, Jake. I love it, man. But yeah, if somebody else wants to go, by all means, go
All
ahead,
right.
guys.
AMC cheerleader has her hand up, so we're going there.
Cool.
Hi guys, it's cool to be up here. Hey, what's up? The Butcher of Wall Street, never talked to you before, and AMC for whatever it is. Just wanted to come up here and kind of simplify things. I totally agree with whatever's being said. It's like it's your opinions. We're all entitled to our opinion, and it's we don't know for certain. It's an opinion in the end, but the fact here is to simplify it all that there is so many shares and there are so many fucking there's just so much money backed up into this fucking stock that regardless how many times it's shuffled, it's gonna fucking squeeze. We need to stop with this reverse whatever. I get it, we get it, I get it. That's just focus on the main facts of why we're all here. It's because of all the shares that were backed up. It's because of all that money that's fucking sitting there. Don't forget what's going to happen in the economy as well. Look where we're at in times. Right now, it's time that we need to reflect on what's around us. Stop focusing on what it's already there. The money's in the bag for us, guys. We've been holding for 2 years. If it's going to be a third year, then fuck it. I'm still going to be here. From what I see lately, the shorts are fucking pissed off through Twitter. My God, I've never gotten so much hate lately. And I come to the point where I'm just more silenced because I feel like the community in itself is becoming toxic. And we need to get reminded why we're here and stop the fighting, stop who's fucking politically voting against what, because we're all sounding like the new fucking election coming up. So we need to focus on the facts, go back to where we started, and stop, be calm, be patient. My God, guys, let's stay quiet for a while. AMC is quiet right now. The beast is asleep. Okay, they want to knock us down. Keep it going then. I don't care if we get to $1. I don't, because I know we're all here. We're all going to stand firm as we've been, like real diamond hands, than the ones who are bitching and complaining then that's how we're gonna get there. So that's why I'm here, just to say that everybody is not wrong. I'm not saying nobody's right, nobody's wrong, but remember why we're here, and that's it. Anything else is just noise. Block out the noise. Okay.
Amen.
Have a great night,
Amen.
guys.
You, I 1,000,000% agree with you. And what people need to understand is this hate and division is not real. It's manufactured. The 1% pride themselves, and they're experts at making the 99%, us retail, us little people that they think they have complete control over us. They pride themselves on their ability to inject division between us, and that's where we've got them fucked up right now. That's where we've got them fucked up, because we are so united. We are united across party lines. We are united across. It doesn't matter
Across
if
the
you're.
OBV, just alone, how much more proof do we need? We're on the fucking charts.
That's
Our
it.
stock doesn't lie.
Yep. I've never seen an on balance volume be above 85, for 2 fucking years. Never in my life. And I've been trading for almost 20 years. I'm 37 years old. I've been trading since I was 18. Never have I fucking seen that, especially on a stock that's going down in price. Like, that makes no fucking sense except for fucking shorts. So yeah, I'm with you. I'm with you,
I
cheerleader.
agree
I
with you
love it.
too. I agree with you too, AMC cheerleader.
Lately, we're hearing a lot about Mullen, MULN, Bath and Body Works. I don't know. There's a lot of stocks that are coming up high right now. They're really hot. And I questioned one of the apes and I asked, well, can you tell me what the OBV shows on that stock? Like, show it to me. Are they going to make it? Because the only reason why we're going to make it is because there's an army of people behind, particularly AMC, Ape, and GameStop that I know for a fact are holding hard. So the others, these are the little baby stocks that are about to squeeze. When we say the mother of all short squeezes, it's because the little baby ones start to rumble. Those are the ones that are going to pop. We're the monsters. Like, we're the fucking bees. We're going to be saved best for last.
Yeah, I agree with you, AMC cheerleader. I think that the people need to be reminded, why they're here. And there's a lot of information going around, and people need to be clear and, again, reminded. I also think the reason why a lot of these things are discussed is because, inevitably people are looking for, I guess, so-called catalyst or a major market event or something that comes up that causes, said MOAS. So that's why, people, they come to these space calls, they're on Twitter, they sign up to Reddit or whatever, because they, they want, even though, dates, and everybody hates on people with dates and, new events, but they're looking for something because it gives them, I guess, strength, right? Oh, okay, this is happening. A conversion is happening, a split's happening, so they're like, okay, maybe this is the time. And it keeps people going. And yeah, you could call it, the hopium and stuff. And a lot of things have come and gone and nothing really happened. But for the most part, yeah, people are strong and people are holding, and you can't deny the OBV. And that's something serious. And, but just coming back to it, they're looking for a massive market event that's going to trigger this. And if that means it's what could happen before the conversion, or the CUSIP change, or the split, people just need to be educated. And don't get me wrong, I know, after the last 2 years, I would say I know a lot, but clearly I'm here getting answers to things that I don't know about, and more people should do that. And it gives people strength, right? It gives people, this energy to keep going and being strong and holding for each other. I feel for the people that bought in at 50, 60, 70. There's people that bought in at 5, at 4. So, we're all in this together, and I agree with you. And I think these space calls and the people that really are doing that have large followers and everything, are really, for the most part, of course, reminding people why we're here. you know, and yeah, it's for MOAS, it's also for change, right? And whether that happens, that change, fine, but we're really here for the MOAS. And we just have to be positive and looking at, you know, even with, like I was saying to AMC for all this limited data we have, there's still, you just can't deny it. And the OBV really says it all. You know, TA is one thing, and I'm not against TA. I'm not the best at it, clearly, and there's people who are way better in this space call. But there's things that just can't deny, right? And OBV is a massive one. And so anyway, yeah, and that's kind of, you know, I totally agree with you. I just wanted to give my 2 cents on that. It's just more people need to get on these calls. They definitely do, you know, just because, you know, I even get messages, you know, squeeze still happening, or, you know, what's going on, I'm nervous. And, you know, and I give people, you know, I try to get people to continue being optimistic and strong, right? I mean, it's also a big part of everyone being together, right?
Absolutely. Exactly. That's why we're here. We're letting the FUD and the fear, the uncertainty start to shake some of you guys, and it's honestly not cool. You know, it gives a lot to the media to report to fucking Gasparino to joke around with. Like, we need to start acting a little bit more mature because the hedgies are not fucking playing. They will kill us if they have to, but we have to remain stronger. And I need all of you to really fucking unite stronger than ever now, because we may hit $1, we may even hit 25 fucking cents, you know? But that OVB needs to be even more fucking, I need it to be more straight than what it is now. I mean, I'm not gonna lie, we're all afraid. We all have money in there. But it's amazing to me how, despite how low we have rose from all-time highs to now all-time lows, like, to me, it's a joke to see the stock at this price. Here I am buying at 11 and 11 at the time, 11.11, like literally, because I'm like, let's just make funsies out of this little joke of price, you know? I have my price set and I have my share set, and at a point I'm like, anything extra, go ahead, give it to me. What else you got?
Yeah, that's good. You know what though? Like, not to be like, oh, look at me, but I'm not fucking scared. I don't care in the slightest. You know, if it does go to $1, oh my God, you know how much money I'd put into the market to buy more? That's fucking insane.
Yeah,
Insane.
I would too, guys.
But I wish it would go down to $1. But no, if we got people lining up here too, if you don't mind. AMC cheerleader, love it.
Sorry.
You've been amazing. Thank you so much for the positivity, and I agree with you. You're awesome.
Thank you so much for having me. Good night, guys.
You too. Hey, Diamond. I don't know if you spoke yet, but if you want to go ahead, 8 Diamond, and then Keith, short seller.
Hey, how's it going, boss?
Good, my friend. Having a great night. What about you?
Doing good. Just closed down my bar. Got 350 people in here. It's a good time.
Sweet. Good to hear, man.
Yeah, so
what's up?
I hope I'm not too far off subject, but correct me if I'm wrong or anything. But I listen to you and AMC Bigham's probably the most. And basically, the general consensus of what I'm gathering here is basically we need the market to crash in order to see AMC skyrocket, and a number of things need to happen in order for that to happen, blah, blah, blah. But I also follow like Gold Telegraph on Twitter, and recently they've come up with a couple posts that say like Japan is doing like another day of unscheduled bond purchase operations, you know, like buckle up. And then they're also saying that Japan owns a lot of USA's debt. I was wondering if that has any kind of like correlation with anything. I wasn't really sure what that meant. Wondering
Of course. Those aren't bullish things, by the way. What they're saying is buckle up. Like, it's going to be a bumpy fucking ride. Because the Bank of Japan purchasing more, doing unscheduled bond buying operations is a sign of their own Japanese dollar the yen just collapsing. So they have to buy more of their bonds in order to prevent their dollar from collapsing, which leads to hyperinflation and leads to them holding the bag when, you know, a market crash situation occurs. So yeah, that's really bad for the stock market, the equities market, the treasuries, bonds markets. You know what I mean? That's not good at all. Japan and China are the top owners of United States treasuries, and Japan owns more than half of their own treasury bonds. You know, so what's going to happen when there's a market crash and economic collapse, like we've been seeing the economy contracting, and it's still not enough. Inflation is still at the same levels that it was, you know, 8%, 7.8%, whatever. Inflation is not good. You know, just because it's not still going up doesn't mean it's not going higher. It doesn't mean that it's still not an average, you know, or an approximate 8% increase in CPI, which we really know is closer to 20% when you look at the prices of your eggs at the grocery store being $10 a fucking dozen, you know, for a lot of people, when a year and a half ago they were paying $2 a dozen. You know, it's like, it's going to continue, and pretty soon they'll be $11, then 12, then 13, then 15, then 20. And even if CPI is still at 7.5%, 7%, that's not enough. The Fed has to crash the market, and so far they've been doing it via this, you know, this soft landing bullshit that a lot of retail is believing, and that's the problem. Is because retail is believing it, and the institutions are risk off and not believing the Fed as well. That's why we're having this slow burn as far as like the market crash being slow. You know, you get a dump and then you get a nice huge pump, and then another dump and a nice huge pump, and just back and forth. The majority of volatility here is occurring because of the lack of QE. There's no more. They're still doing QE. You know, the Bank of Japan is buying those bonds and stuff, and at the same time, the Fed is trying to raise interest rates, and then they're also got the reverse repo going, and then the Fed is also trying to unwind their balance sheet, but they're still buying more fucking bonds. So the bonds rolling off from the Fed is insufficient, and at some point, you know, when all this you know goes south, the Bank of Japan will default, and a lot of these, you know, the market has to crash. It has to crash, in my opinion, and I'm fairly positive I'm right. I feel like fucking Michael Burry, not because I want to compare myself to him, but because I've been 2 years fucking early. You know what I mean? That's how a lot of people are. You know, and back in 08, nobody believed him either. And it's the same fucking problems that we saw back then. But now, because of inflation, because of all the issues seeing, we have to see a demand destruction and economic destruction by the Federal Reserve. And that means that the poor and the middle class, you know, the 95%, the 99% are going to be the ones that really hurt. And really, it's more like the bottom 90%, you know. The top 10% is going to be okay, you know, and I don't really worry for myself, thank God, you know, but a lot of people can't say the same. A lot of people are in really heavy credit card debt. And I don't say this to scare people. I say this because sadly, this is reality. And that's why we push, you know, make sure you're properly hedged whatever way makes sense for you, you know, whether it be gold, silver, land, you know, food, AMC, GameStop, you know, whatever the fuck works for you. But that's not tech stocks, you know, that's not Amazon, you know, and that's not, you know, Microsoft and things like that anymore. And that's why you're seeing the QQQ get crushed and the NASDAQ get crushed little by little over the last year because of what's happening. And inevitably, the Fed has to continue the economic destruction, the demand destruction, in order to put more people out of jobs, to force them to default on their auto loans and their home loans. And that's going to drag down the real estate market, the commercial real estate market, the used car and new car markets, you know, and everything else related to the economy as well. More people have to lose their jobs so that they're no longer out there buying things and stimulating the economy and keeping the GDP higher in order to reduce the inflation. Because if you guys have seen, all these companies are doing layoffs. I think even, I don't know who the fuck it was right now, just said they're going to lay off Amazon. I think they're going to lay off 17,000 more people.
17K.
Yeah. Yeah, they're going to lay off 17,000 more people, and that's just the start. Like we haven't really seen the cause and effect that's occurred based off of the Federal Reserve's raising of interest rates yet. We haven't seen that yet. We saw the fucking cause of them, them raising the interest rates, but we haven't seen the effect of how it's going to impact people so much. That's to come in like the next 3 to 6 months.
And it's already. You were talking about credit card balances.
Oh my God!
Third quarter of 2022. I'm looking at some stats right now. Americans' total credit card balance is 925 billion with a B in the third quarter of 2022. Now, since the third quarter, so in a year, credit card balances have risen by 121 billion. 15% increase year over year to the amount of credit card debt. So that tells you a lot about where people are, like where everybody is. When people start buying things on credit and their credit cards rather than paying cash, and they're not paying off their balances. That's the kind of situation we're in right now. So I just wanted to throw a few numbers. Sorry to jump in there, but
no, I'm glad you did, because that brings up the whole credit card company situation. Like the credit cards come from banks, and then people are going to be defaulting on their credit card loans and filing bankruptcy and losing their investment properties, losing their cars, their RVs, their boats, losing their homes, and on all this. Sorry, not their homes. A whole bunch of other things, and then the credit cards themselves aren't going to get paid off. So that's going to be a charge off, and then they're going to have a tax deduction, potentially leading to great losses from these big banks. And all these institutions that are FICC backed or accepted by the FICC to, bilaterally net trades and, use the reverse repo, they're going to be getting bailed out because they're absolutely paramount to the success of the United States Ponzi scheme of the fiat. The central banks, the Federal Reserve's fiat Ponzi scheme revolves around a greater issuance of money and debt. And that's why the dollar has been inflated, has lost 97% of its value from the time the US dollar was first issued. And that's not going to just go down. It's going to be, further lose more value. You know what I mean?
Well, once it got decoupled from gold, I mean, that's really where everything just went to shit. I mean, there's people talk about, oh, crypto is, it's based on nothing. Well, that's what our fiat dollar is now.
So's the dollar.
So's the dollar. So
I
mean, this is what we know. Like we're used to this. So I mean, for anybody who doesn't know, look up the history of the dollar. Look up look up the Federal Reserve. Look up uncoupling the gold from the dollar. Look up all these things, and you'll be amazed at the economic fuckery and trickery, sleight of hand that our dollar really is. It's not as simple as it should be, for sure.
Yeah, that's what was like the death knell, in the US dollar. When that happened, it was so that the Fed could print unlimited amounts of money because they don't have to back it with anything, and keep pushing the Ponzi scheme. And that's what allowed, hundreds of trillions of dollars of derivatives notional values to be created by big banks when they only have, 1/50th of that amount in actual assets. So, and then as the economy contracts and markets lose value, mortgage-backed securities, credit default swaps, and CDOs, and all sorts of other things that they own are going to be losing in value. I mean, I guess the credit default swaps will go up, but those mortgage-backed securities and real estate and everything else, all their other assets are going to go down a lot more than the credit default swaps would go up as a whole. So it's an interesting situation, my friends, and that's why people need to be properly hedged. Right now, like, hey, having cash is real important. Having cash is king. But that's what I've been pushing now for almost 2 years at this point. A year and however long it's been, almost 2 years. When I decided to start doing Reddit and YouTube and coming on Twitter, I joined Twitter in June of 2021 because the shit that I found all revolved around the fact that, you know, the Ponzi scheme has reached its peak. You know, they cannot continue this QE because of inflation. And I was calling this shit in June of 2021 before inflation actually reared its ugly head, because I could see it fucking coming. Like it's obvious. It's obvious that the game was over. You know, back then I think inflation was at like 2.5%. And I go, guys, this is it. Like, we're about to hit hyperinflation. And you guys can, I'm just saying theoretically, most people, 99.9% of people don't see it coming. The Fed and the central banks see it coming, but they're going to pretend like they don't, because they need to continue this perpetual Ponzi for as long as possible. And after this demand destruction happens, and then they bring people to their knees, then they will issue, you know, stimulus and other economic stimulus and bailouts to the American people and the people around the world via the central bank digital coin to force you to sign up. So being strong with cash and being properly hedged is really important. And that's why I think, you know, AMC and GameStop and inverse to the market stocks are extremely important, because I see AMC as like the ultimate VIX, the volatility index. The volatility index is, right now, it's being greatly manipulated in order to prop up the SPY. Naked shorts on the VIX are a huge thing that most people don't understand. AMC and GameStop are not just about AMC and GameStop. They're about the entire global financial system, in the sense that they run inverse. It's much similar to the way the VIX historically runs inverse. It's down, manipulated like crazy. But then when the things break, the VIX fucking runs up from $25 up to $80, $90, like it did in 2020 and in 2008, in 2000, and so on. Every time there's a market crash, the VIX goes nuts. And that's the same thing for meme stocks. You know, January 28th, 21, that was a fucking complete market destruction. But at the time, there was no hyperinflation. And QE was the fucking federal money printer was going at full speed. You know, there was no QT in sight. And so that's why they were like, okay, we need to put the brakes on this. Let's keep retail from buying. We'll pull the buy button, and then we'll issue tokenized securities via FTX and Bittrex to put out 1.2 billion shares of AMC, for example, when only 516 million are supposed to exist. We can use those to borrow and to short the stock through derivatives contracts and swaps. And thus bring the price back down to a manageable level, you know, and then we'll take it from there and see what happens. Like, so now we're at a point where FTX is fucking bankrupt and defunct. Bittrex has pulled their AMC TSOs because retail was just going absolutely nuts, going bonkers, you know, shoving their foot up their ass on Twitter and all sorts of things and pulling their money from Bittrex as well. So they didn't want to have those financial runs that caused the FTX collapse to begin, you know. So now they had to shift over to other forms of manipulation, and they're not as effective as having 1.2 billion synthetic shares out there that they didn't really own through FTX and Bittrex, you know. So there's a lot more going on here than most people truly understand. I'm sorry if that was a long rant here, but I could talk about this for like the next 6 hours straight and just continue to give more examples of what's going on. But the fact of the matter is that AMC and GameStop and the VIX will get crushed until something breaks. And when that breaks, we're going to be filthy fucking rich. And I laugh because it's so fucking ridiculous that this is occurring. But because it's occurring, it's the only thing that's given me this opportunity that I've never had in my life before. And I am eternally grateful for that. But you know, we didn't cause these pensions and these 401ks and thrift savings plans to be invested into the things that they're invested in, to be used to short stocks, you know, for BlackRock and Vanguard to lose people's life savings, you know. We didn't do that. All we did was buy and hold a stock that we saw was being greatly manipulated. You know, we didn't force, you know, you get my point, right? We are, like my friend Wolfie likes to say, we're not the cause, we are the cure. And even Dr. Metzler on my channel last week on December 30th, I interviewed Dr. Marco Metzler. He's a former Fitch Ratings analyst He was an analyst for Fitch Ratings. He's got a PhD in economics. And he literally said, apes gotta fucking hold. He didn't say fucking. He said apes need to hold. This is the worst thing that could happen to these big banks and institutions. Apes holding. This guy's a fucking former Fitch Ratings analyst. He doesn't even own AMC and GameStop. You know, he's told me this. He's told the public this. But he knows what's going on because he's done the due diligence. He owns silver and gold and other precious metals and stuff like that because that's safer. And a guy who's already filthy fucking rich doesn't have to put his balls on the line. You know, he doesn't want to take any chances. So he's not invested in AMC and GameStop like we are. I'm also invested in silver and gold, but I'm not filthy fucking rich yet. I've got money, but I'm not filthy rich. And I'm not leaving until I get filthy fucking rich or until I lose, you know, the shitloads of money, the hundreds of thousands of dollars that I've invested in these meme stocks. And I'm not worried at all. Sorry, I digress here. Let's take some more questions if you guys are still awake.
Well, boss, I've never known you to be passionate and go off on rants before on any topic, so that's very unusual for you. You know, hey, I actually got to make like a baby and head out, but before I leave, there's one thing I did want to talk about, and it's something that AMC cheerleader brought up is the fact that we do need to be united, and I've been saying this for a long time. And if you don't believe that I've been saying this for a long time, take a look at my pinned tweet. And I'm going to read it for those of you who you know, don't feel like navigating to my pinned tweet. We are and this was on June 22nd of 2021. So this was after our run up and we started coming down, but it was at a time where, you know, everybody was kind of wondering. And I said, we are already past the end of the beginning. It is now the beginning of the end. We are strong because we are united. Like strands in a rope, no single one of us can bear the weight alone, but together there is no weight that can break us. Apes together strong. And I stand by that. I live that. I breathe that. You know, on my channel, you've been there, boss. My people, that's what we are. We believe that 100%. And everybody just needs to keep that faith, keep doing what we're doing. We're doing the right thing. The plan hasn't really changed. It's very simple. We just hold until they die. That's it. It's really, we can do all the other, you know, and it's good that we have all these other things happening that, you know, where we got to look stuff up and figure things out. And that's good because it keeps us engaged. It keeps us involved. It keeps us looking. It keeps us learning and educating and growing. But it keeps us involved in the process. But realistically, all we need to do is just hold and buy when we can. And that's totally up to you. You know, do whatever you want to do. But that's what I'm going to do. I'm going to buy when I can. I'm going to hold. And I still have it, boss. I showed you those. I think it was the last time you came and visited us. I had brought up to show my family. I still have my shares from January 2021. I still have those shares, and I have the corresponding ape shares. I ain't sold shit. Why?
That's an original gangster.
Because they ain't paid me what those fuckers are worth yet. Period. So we're going to be so motherfucking rich. I'm telling you, guys, we are all going to be so motherfucking rich. Stay strong, support each other, lift each other up. That's what we need to do. We need to make sure we stay positive, lift each other up. Don't buy into the bullshit. Don't buy into the negativity. You got people in your life, in your area, in your sphere of influence who are bringing you down, who are negging you out. Boot them the fuck out. Don't deal with that shit. Don't. Positive. Spread that positivity to somebody in your life each and every day. And I don't care if that's a random stranger. You know what? You know how good you can make somebody feel by spreading positivity to somebody that you don't even know. Just hit them with something positive. Hey, you look awesome today. Hey, great job on this. Whatever it is. You know, even just randomly go on Twitter. Go to a random tweet and just tell somebody how awesome they are. Like, do something positive like that. If everybody took the time, and it doesn't take very long, but if everybody took the time to do that, the world would be a much better place. So I'm going to leave you guys with that. I am out of here, boss. Thanks for inviting me in. This was awesome. Had a great time. And guys, we're going to be so motherfucking rich.
Thank you, my brother. Make sure you guys go to AMC. If you have Telegram and you want to join
I'm not associated with it. I'm not sponsored or paid or gifted anything in any way. But AMC for All has an awesome Telegram group that I've done a couple appearances in on his Saturday night shows. You can click his name. He's a co-host right there right now. Click the Telegram group if you want to join. He doesn't sell you shit. He doesn't try to scam you. If anybody approaches you asking for money or your personal information, just fucking block them. But yeah, that guy right there, he's got a cool Telegram group going on, and they do share a lot of information. So thank you, my friend, AMC for All. Aaron, thank you very much, Aaron.
Thank you, Marcel. Great as always. Talk soon, bud.
Good night, brother. Keith Short Seller, you've been waiting real patiently, my friend. Why don't you go ahead, man? Sorry to keep you waiting so long.
Oh, that's fine. I got a question about the ape, right? He said that it worked as intended. And to me, this whole thing, all this news that he just put out, to me, it seems like there's something major missing. It just doesn't even pass a common sense test, right? If you have them trapped and you're only letting 420 million cover or close their position right now, why the hell would you ever let them out? This could be an infinity squeeze for years to come, and keep letting out a few million at a time and letting them cover a few million at a time, or whatever it would take to cause this mother of all super squeezes. So to me, it just does not make common sense that I think there's something else big coming within the next 3 months. He took it on Antera, it's great that instead of having a debtor, he has an investor now in his company, which is great, and got rid of some of the debt. But why? There's no way you could tell me that he's going to let these motherfuckers out with the other 4 billion shares. So what do you think about that?
I'm not sure if I really understand your question, but when you say like letting them out,
well, he has them trapped. He has them trapped with ape. Okay, they can only close 420 million right now. How they going? Where's the other ones coming from? Because they have to buy AMC and ape. Why in the fuck would you switch that to where they have to buy AMC only when you have them trapped with they can only cover 420 million right now and close that position? So if we believe that they're 8 billion over the float on AMC, that would make them 8 billion the over the float on ape. Plus, we know for a fact that we bought more ape than AMC. So let's say they was 10 times short on AMC. That would make them 15 times about short on AMC. You take that times 10, that would be 250 to 1 either way they do this shit. And so I could see that advantage of a short being 25 to 1 short. But again, why in the hell would you take a chance of letting them out of a trap that you set for them? There's no way possible. How can they get out? How can anybody get out of this besides 420 million until he lets more ape loose? That's my point.
Yeah, it's a good point, and I think the to your point there, they're pretty much, they're pretty fucking trapped, especially seeing the way that ape's price got run down so hard. That wasn't organic. That was a lot of shorts. And so they piled in to bring ape down to prevent AMC from selling more shares. So they've increased their shorts exponentially from just what was once AMC that were, they doubled the shorts on ape, and then it increased the shorts more that had to short AMC and ape even further. And then AMC won as well. And then the ETFs and a whole lot of other things that hold AMC, right? So in order for them to cover these short positions or close these short positions, they're not going to do it willfully, right? So the conversion of ape to AMC would create the conversion of ape to AMC, and the reverse split would create several conditions. It would change the CUSIP number, and when you have a CUSIP number change, naked shorts have to close their positions, not cover, but actually close their positions.
Thank you. That's what I wasn't for sure on. I was reading where it said they have 1 day to close, but there was another condition on it that I didn't know.
Yeah, they have. First of all, naked shorts have to close their positions when that CUSIP change occurs, but not regular shorts, right? Shorts that are not naked, they can roll their positions to the new CUSIP number, but they're still short. And then the cost to borrow is going to be exponentially higher. We don't know how much higher yet, because we know that the share price will 10x.
So the share price 10x's, now that cost to borrow, and there being 10 times fewer shares to borrow and 10 times fewer shares to lend out as a byproduct, that would increase that cost to borrow even more. There would be more hard to borrow, and that would be more of a drain on the liquidity of the shorts themselves. So then they would have to go out and find more shares to borrow or buy more shares, which would cause the price to go up as well. So there's a lot of factors here at play that are extremely difficult to understand. You know what I mean? Adam Aaron's not letting them out. He's more so trapped them with APE. That doesn't mean that when APE was issued that the short squeeze was going to occur, which is a common misconception. It was the setup for the checkmate. It's the checkmate. It doesn't mean that the game's over, you know, because now the real checkmate happens with the conversion to the reverse split.
Well, that's exactly what I'm saying. He called checkmate on it. So to me, if you're going to convert them back over in the AMC where they only have to buy AMC, well, wait a minute. They would still have to buy one AMC and one APE, correct?
Well, APE will cease to exist after the conversion in the reverse split, right? So APE would cease to exist. But the short position.
How
Isn't
many
it converted 1-to-1? It should be converted.
It's going to be
1-to-1.
Yeah.
So, but just sorry to interrupt, guys.
It is going to be converted 1-to-1. So the 1.4, you know, let me put it this way: every APE share is going to become an AMC share, and there's going to be like 1.4 billion shares of AMC, and then they're going to divide that by 10. But the dollar amount that was inserted by the shorts remains the same, but the cost to borrow is going to go up, and their ability to find those shares to borrow is going to go down. So shorts are going to have to work harder and spend more money to maintain just their current position. You know what I mean? So there's going to be less incentive for them to stay short. And then on top of that, one more thing.
400 million go? Sorry.
They get converted to AMC. There's more than 400 million APE, you know, but all those shares of APE, every single one of them is going to get converted to AMC. And then that's going to be divided by 10 if the reverse split and the conversion approvals, you know, get passed. But the real kicker here is when AMC dilutes the shares, that is like a lifeline for the shorts. They're going to want to buy those shares so that they can close out their short positions that are still outstanding. That's going to further raise the price. That's going to put other shorts in danger. So it is truly a checkmate in my opinion. Even if it doesn't trigger the MOAS, I still think that it's going to trigger a hell of a short squeeze.
Well, that's what was confusing me because he said 1.4 million shares to be left after the
1.4 billion with a B.
Yeah, after the
1.4 billion
split,
with a B. Yeah, yeah, that's all of the AMC. That's like 516 million AMC plus like 650 million or some shit like that. 700 million shares of APE, you know, combined. Equals the 1.4 approximate billion. Yeah. So then because the shorts would still be.
So where does the other 4 billion go?
What do you mean 4 billion?
There's 4 billion APE that's never been put out in the market.
Oh, I'm sorry. Oh yeah, no, those have never been issued. Those don't exist. AMC just has the right to issue them. I see what you're saying.
So they'll still have the right to issue them later in the future?
No, because they won't be able to issue APE anymore. They'll just be able to issue more shares of AMC. They would be able to dilute AMC in the same way that they're selling APE right now for, you know, like people were mad they're selling APE for 66 cents. They could sell AMC for $66 and only have to sell a few hundred million shares to pay off the majority of their debt, or at least enough debt to be financially healthy, pay off those debts that have covenants that prevent them from issuing a dividend. And then even if let's say they pay off, you know, $1 billion, $2 billion worth of debt off of 100 million shares of AMC at $66 a share, you know, or whatever, or 200 million shares of AMC.
That's also my point, that when I said it doesn't make past the common sense test why he would let them 4 billion just go to waste when he said it worked his plan, right? So to me, I seem like in the next 3 months that there's something going to come up where he's going to do something with them.
I agree. I think it's a combination. He wouldn't be letting the 4 billion APE go. It's just like he doesn't have to issue those, right? But now he'll be able to issue shares of AMC instead. Okay, and by issuing those shares AMC, he could pay off the debt, and those covenants that prevent them from issuing a dividend will be gone. And then that would allow AMC to issue a dividend. Let's say it's 25 cents a share. The short's got to pay those 25 cents a share. So that's another giant dent in the liquidity of these shorts. That's going to hurt the shorts. So that's more incentive for shorts to close their positions.
So that makes perfect sense then. So like I said,
Yeah.
if you hypothecate or make an assumption that they're 10 times short on AMC and then 10 times short plus say a little bit more, 15, that would make them 25 shares short. You do it 10 to 1, that's approximately 250 shares to 1. They're short. They're screwed bad.
Yeah, I agree, bro. I agree. That's a good point. Thanks for bringing up those 4 billion shares too. I forgot. Like I don't even really think about those because they haven't been issued. But yeah, I'm glad you mentioned that because I know a lot of people probably had that same question. Good
and
stuff,
like you
Keith.
said, if he could put them on the shelf on AMC and we get a squeeze and then he drops some of them, holy crap. I mean, there you go.
Yeah. Yeah, anybody else? I appreciate you, Keith. Yeah, that's some great points there. Diamond, I see you got your hands up if you wanted to ask a question as well.
Hey, boss. I don't know if it's a stupid question or not, but if APE is a third of the price of AMC right now, like what's to prevent people from just like using the money they have in AMC, selling it and just buying all APE with it and then having like triple the shares afterwards?
Well, one thing would be the long-term capital gains tax.
Yeah.
You know, a lot of people have been holding AMC for over a year, and that puts those AMC shares, as long as they haven't sold them, under long-term capital gains, which cuts capital gains in half. So instead of giving the government, 42%, or if you're in California, 52% of your gains to the government, it would be like less than half that. It would be like 20% to 30% for California, 20% for the rest of the country in capital gains that would have to be paid in taxes to the federal government and the state. So that's one reason. That's a big reason because, right now you look at it as $5.50 a share for AMC or whatever, the $5 a share for AMC. But if you may, say it goes up, theoretical numbers, let's just say 5,000 a share. I'm just going to say that because it's simple. It's not crazy high and it's not crazy low either. Say 5,000 a share. That's a nice fucking number. You know what I mean? And you're going to only be giving the government 20% of that instead of 40% of that. It may or may not be worth it for you to sell those shares of AMC and go out and buy APE with it. In addition, that's one reason. Another reason why it would be bad is because then it would be giving shares of AMC into the market maker's hands. And when retail sells via a payment for order flow platform, these shares can hide out in the OTC and over-the-counter markets, I think, for up to 28 days before they're pushed through. And also, then that gives more shares to the market makers in the shorts that they could buy or that they could be lent from other broker dealers and institutions to further short the price. So there's a couple reasons. But other than that, this is not financial advice, of course. Those are two very good and compelling reasons, and I have, 5X shares of AMC and APE, and I haven't sold a single share of AMC to buy more APE. I'm just putting more money in and buying call contracts and bought shares of APE and such. I even, as a matter of fact, to get them out of my margin account, I have multiple brokerages, but to get them out of my margin account, I sold over 1,200 APE shares, I think yesterday or the day before, I think it was, and so that I could let, retail, hopefully retail, pick them up, but even still, at least if they're out of my margin account, there's a chance that someone that has a cash account picked them up. Now I can use that money to go, either shift it to another brokerage or to buy more call contracts or shift it to another brokerage and buy, shares of APE on a cash account and get those same 1,200 shares back, for around the same price, and maybe even pick up more APE shares than I had when I sold them. So I'm not doing it. Everyone's welcome to do whatever the hell they want. You know what I mean, bro? I just don't think it's a good idea because I don't think it's good for retail, for the rest of retail. But at the end of the day, everyone has to look out for themselves. We're all in this together. I think we're all going to make it. But at the end of the day, you have to look out for yourself, and I have to look out for myself. But I still haven't found that. And some of my AMC shares aren't even in long-term capital gains yet. But I still have not sold them to buy APE shares because I just don't think that that's a great idea, And if I did, I just don't think it's a great idea personally. Like, there's nothing wrong with it. It's just not for me, there's nothing stopping anybody from doing it. But those are the main compelling reasons that I could think of not to do it.
I was just like, I didn't do that myself. Obviously, like, most of my shares are over a year held, and I was just noticing like the prices between the two are starting to get a little bit more similar. So I was afraid that people may be doing that, and selling is against my religion, so I'm not going to do that.
That's funny. I wouldn't hate you if you did. I'd say good luck. I hope it works out. I hope you get a shitload more AMC for it. Like, I couldn't blame you if you did or didn't. Like, to be honest with you, I wouldn't care. I'm going to keep doing what I do. But yeah, there's not any great reasons not to do it, other than the fact that it would give a shitload of shares of AMC to the market makers and the short hedge funds, and that's the opposite of what I want to do with my shares.
Yeah, I don't want to make any kind of move to hurt the movement or whatever, but
yeah, you know what? Because it's good. What's good for the goose is good for the gander. By hurting the movement, I'm hurting myself.
Exactly.
So yeah, I agree with you, man. That's a great question.
The last question I had was when this whole market crash starts to happen, like the real market crash, not this little shit we've seen, where do you think like the biggest start of it would appear from? Like, do you think it would start over in the East and then work its way over? I've seen like a lot of stuff like start over there and then hit Europe and then United States afterwards. And do you think it's anything like that, or what would you think to be the biggest like telltale?
I mean, man, Evergrande's bankruptcy court hearing is in March, like the March 20 something of this year, and they kicked that can last year, and they kicked it till like October, and then in October they kicked it to March, the hearing. But I don't believe that they can extend the hearing for Evergrande anymore. And Evergrande's got hundreds of billions of dollars in commercial banknotes and commercial paper, bank paper that they've issued out, and they cannot fucking pay it, dude. So that's going to be, not to mention all that commercial paper maintains 100% of its collateral value, of its historical value. So if they bought it and it was worth, say, $30 a share at the time, then currently, even though Evergrande's 30 cents a share, that's still worth $30 a share on all those contracts and for ISDA. So to ISDA, they're going off the historical value of $30 a share, when in reality it's currently at that price of 30 cents a share. So when Evergrande goes down to $0 or whatever, when they go actually bankrupt, because they're bankrupt already, they're just committing bankruptcy fraud, period. Now, I'm not saying this is what it's going to be, but this is one thing that it could be, right? And when that occurs, there's going to be not just tens of billions, but hundreds of billions of dollars in banknotes that don't get repaid to banks all around the world: Germany, France, Africa, Australia, America, South America, everywhere, China. And then so that's going to create a crisis in every single country. And then that's going to create a domino effect where you're going to be seeing like Lehman Brothers and Bear Stearns occur all over the world. And then that's going to be like kind of what you're seeing now with FTX, and then another cryptocurrency exchange, and then another stable coin, and like Terra Luna, all that shit, AAX, all these exchanges. Now you're seeing Gemini, which I'm predicting Gemini is going to go bankrupt in the next week or two. And you're going to be seeing all these things occur with banks and other institutions and such. And then they're going to be margin calling hedge funds and family offices and retail investors and broker dealers. And then they're going to be margin calling each other. The broker dealers are going to margin call the shorts, and so on. So it's this huge chain of events that every day that occurs, we're getting closer towards, right? So really, I think that it could be Evergrande, China, Japan, things like that. The collapse of of Japan with their bond notes, where they're doing basically 5 days a week now. They're having these unscheduled bond buying programs. These are serious problems that can't be remedied. There's no fix to it. There's no fix to fixing the issue with the Japan bond crisis, and the American treasuries and everything else that's going on. Something's gonna break, and when it does, I don't know if it's gonna be Europe first or China first or FTX first. You could say, I think that it's already begun. This began the day that they stopped QE. At the end of 2021, when 2022 began, on January 4th, 2022, the very first day of trading, I was streaming on YouTube because I knew that shit was going to be nasty. And sure as shit, the entire month of January was disgusting. It was the beginning of the bear market. And it's what we're seeing now is just a continuation of that. This is a long, slow burn, and it's going to continue until something breaks, just like it did every other time. But now we don't have $80 trillion in derivative values like we did in 2008. We got like 600 trillion in derivatives notional values from the top 1,300 banks alone. That doesn't even include all the other institutions associated with them. We're just talking about 1,289 banks that trade on the derivatives market internationally. That's it. Think of all the other manufacturers, distributors, warehouses, just everything from semiconductor companies to car companies to grocery stores. We're going to be seeing a ridiculous number of places and businesses go out of business, and people are going to lose their fucking jobs and their houses and their cars. And that's going to further exacerbate the problems in real estate and the used car market and all this shit. And the reality of the fact is that it's quite a sad situation, but it's going to continue like that until multiple events happen, like, FTX and Evergrande and Phase 6 and all this shit combines, and we have like a day like we had on the markets that makes 2008 look like fucking child's play. There's no way about it. Because if the Federal Reserve tries to come out and save the market from that happening again, inflation is just going to go higher. And then when they come back and try to save it then, inflation will have been so bad that people probably won't even be able to afford food, and they'll be burning down the fucking, they'll be burning down the banks by that point. It'll be chaos. So the Fed can't have that. They've got to let it burn out until we have a market crash, until the retailers capitulate. And I'm talking about like people investing in like tech stocks and shit, not people investing in things, silver and gold and VIX and all that crap, AMC, whatever. When they capitulate and they sell their Apple and they sell their fucking Tesla and their 401ks and all this other crap, Tesla, not even, I retract Tesla, but, Apple and Amazon and Microsoft, the FANG-MAT stocks, the FANG-MA stocks, I should say at this point, because I think Tesla's being ridiculously attacked right now by short sellers. Then we're going to see more of a situation where the inverse stocks will run, and by that point, so many people will be so broke that the Fed will come out and say, okay, this isn't working. We're going to give you guys a bailout. We're going to give you stimulus money. This is after they bail out the banks. Now we're talking about to people, to retailers. They're going to, okay, you guys want this bailout? Sure. Here's a CBDC. Sign up. We're going to control everything about your financial life, when and how you and how much money you spend and where. And then you can have a bailout, and then they're going to issue the central bank digital coin, just like these other countries like India and shit are already tested out. China's got their CBDC out and stuff like that, and they're forcing people to sign up on their app on their phone. And if your social credit score is too low, you can't buy groceries, you can't pay your fucking bills. And if people around you and you have a bad social credit score, it's going to bring down their social credit score. So then your family and friends aren't going to want to fucking be around you. It's a massive way for the Fed to continue this Ponzi scheme. And I'm not scared of it. I'm going to prepare for it, as most other people should be thinking as to what they're going to put their money into. Things overseas, land, acquisition companies and companies offshore that would allow people to invest their wealth in things that wouldn't force them to put it all into the CBDC. To maintain some control over your own finances and not have the government tell you how to spend your money. So that's why we say tangible assets are very important, and hedging yourself properly is very important, because if the CBDC comes out, I can still go anywhere in the world and buy land with my silver and gold, and they're going to take it in a fucking heartbeat. You know what I mean? And that's not the case with your dollar.
Mm-hmm.
But
So there's a lot of ways where you can spend your money. I'm sorry if I went off on a tangent there. That was a really good question.
No, it's all good. So AMC Bigums was saying that we should take up outside of ISDA banks. Is that something like the everyday investor can like help kind of like steer us in the right direction by doing that?
Oh, I wish everybody would. I did it. You know, I know Bigums did it. I did it. I closed banks with Bank of America, BMO Harris, and a bunch of others. I closed out all my other accounts, and I went to multiple credit unions. I got multiple credit unions for various reasons, but for safety. You know, credit unions that are not invested in ISDA bank, you know, swaps and shit and derivatives.
Yep.
And I feel really comfortable. I love my credit unions. You know, I feel really comfortable with my money there. I don't really worry about it. You know, it's not the only place I have money, but you get what I'm saying, right? Like, I feel like my cash is safe. I don't think they're going to go fucking bankrupt. If they do, you know, I'm not worried about it because I don't want to insurance. FDIC could take up to 2 years to return your money. And the FDIC doesn't actually have sufficient funds to pay everybody. So it's a really slippery slope. Yeah.
Yeah, that's something I was thinking about doing, but I just going on vacation soon. I didn't want to fuck with it, but yeah, no, this definitely sounds like a nice move. Thanks for your opinion. Appreciate that. And then last thing, you don't think they're gonna pay us in CBDCs after a MOAS situation? Like, what's your opinion on that?
I don't think it'll last that long. But even if it does, I wouldn't mind selling it, you know, and buying certain things with my CBDC that I could take offshore to buy businesses and land and other tangibles and farms and so on. There's plenty of ways that I could sell my CBDC for other things. That's not really a concern to me. You know, I would diversify greatly, even if they paid me in the CBDC. I wouldn't care. I just want to get fucking paid. I don't care how long it takes, you know, or how they pay me.
I don't give a fuck either. Yeah,
cool,
man,
bro. Good question.
I'm down 50,000 between the two, and I don't give a fuck, bro. I don't give a fuck.
I hear you. That's the attitude, man. That's the attitude to have. If you're in the stock market in general, a lot of people don't realize that. I have my money in Apple. It should be safe. Yeah. Good luck. You know.
No, I hear you, brother. Hey, man, that's all the questions I got for you, man. I listen to all your stuff all the time. Everything I can, I share. I just want to really thank you for your time, and literally everything you say is so intelligent to someone like me that's just kind of gotten in the stock market the last 2 years. And, you know, everything you say is fucking gold, as in I appreciate it. And I know you're not doing this for fucking cash or money besides the play, but taking everyone's hand along with you and kind of steering them in the right direction in your point of view is just, I can't thank you enough, dude.
Really. I appreciate you. I don't know everything, man, and I'll be the first one to admit, if I don't know something, I'll be like, I don't know. I did that a couple of times already today. But if I think I know, or if I know, I'll let you guys know, hey, this is what I think, or this is what I know, this is how I feel. You know, so yeah, good looking out, bud.
No, I appreciate it a lot, man.
You too.
I'll let you go.
Hey, you know what, Bruce Wayne, you've been waiting patiently too, and I know you got a couple more questions. You want to run a question too, bro? I know you had some real good ones too, and then Keith can go next, and then we'll bring up the next person that requested.
Yeah, sure. I appreciate that, bro. Thanks. I actually really enjoyed listening as well. Really good questions. So just regarding the first one was the T+90. So I know that was floating around for a little bit.
Oh, yeah, this is good.
Yeah, and there were some dates. You know, there's some people saying the 28th, I think it was. And, you know, I even talked about a little bit, but obviously I wasn't too sure. Some people were saying January or whatever. Can you just kind of fill us in a little bit about that?
Yeah, it actually is not T+90, it's C90. And I know why a lot of people made that mistake, because I made that mistake. Houston Wade made that mistake at first as well, too. You know, he said T90, and then I'm like, yeah, T90, that's exactly, you know, that's what the 90-date syndicate, you know, the selling syndicate for the distribution, which is the IPO in this case, would have to abide by. But I made the mistake of not, even though in my Reddit posts and stuff, I specified that it was 90 days
right? But then I kept mentioning it as T plus 90, not even thinking about it because it's just such a common thing. But the reality of the fact of the matter is that T90 means trading days, right? But it's not T90, it's C90, 90 calendar days. Okay, and the reason being because the FINRA, I'm off the top of my head here, but I'm pretty sure it's FINRA regulation 11880. If somebody Googles FINRA reg 11880, I'm pretty positive it's the selling syndicate rules. And I'm sorry if I'm wrong, but I'm going off the top of my head, and I'm pretty sure I'm right here. And what that means is when you look on there, it clearly states that it's clearly states that the selling syndicate issuer of the distribution has 90 days. So they didn't say 90 trading days or 90 business days, but they said specifically 90 days to issue to deliver all the shares to the broker dealers. Otherwise, the broker dealers automatically liquidate and can automatically liquidate. And so that puts the date at around November 22nd, November 23rd. And as you guys may or may not remember, November 26th through 28th, we had the really nice run-ups on APE and AMC when they both went up like 20% for several days in a row. Remember that? They were up like 55%, 65% over like 3-day period. That was C90 plus a few days later and a weekend, which is about how long the selling syndicate would get from a broker dealer to issue the remainder of those shares if they had not done so by then. So T90 actually occurred like around November 23rd, and the price action, we saw it on November 26th through 28th when AMC and APE ran up, remember, like 25% each day, and then it got shorted down some, and then it ran up again 25% the next day, and then it got shorted down some. That's what was happening, in my opinion. That's exactly what was happening, in my opinion. So I never said it was going to cause the MOAS, even though a lot of people tried to, not you guys, but a lot of shills and people that don't like me try to misconstrue what I said and try to say, oh, you said T90 was going to cause MOAS. You said the executive order was going to cause MOAS, and phase 6. And I'm like, no, I never said any of those things were going to cause MOAS. I said there were important dates to look at where we could potentially see price action that could lead us one step closer to the MOAS, and I've always stood by that on all the things that happen. Even Evergrande, that might not cause the MOAS. It could just get us one step closer to where really margin crashes, like margin calls really occur, will be when we have the global financial collapse 2.0. That's really what it's all about. So C90, T90, was November 28th-ish, and it didn't. We had some nice price run-ups, and that was it. But that's not because shorts had to cover all their positions. The selling syndicate's job is to find one, to make a market, and two, to find shares to sell on the market. Okay, those are the two jobs of the selling syndicate. And this happens in the case of any IPO or any dividend distribution like APE. And so this is a very complicated thing that a lot of people don't understand. And the only reason I understand it is because I've been studying so hard for the securities industry exams and the FINRA, exams for the Series 6, the Series 63, and the Series 24, because I need to take those 4 tests and get those 4 certifications here in the next couple months in order to be able to work on the floor as the CEO of Lit Exchange, a broker dealer that I'm currently working on, that our attorney is currently in the process of getting approved to be a FINRA. So if it wasn't for me literally taking these practice tests like a few times a week and reading these fucking books, I wouldn't know this, and I heard about it from Houston, and then I started digging into it, and that's when I really started learning more about it and digging more into it. And those are the 2 jobs of the selling syndicate that did occur. There was 43 million failures to deliver on APE, on the day of issuance that we found out about 2 days later. And the C90 data of around November 23rd kind of equals out the 90 days there, plus a few extra days for the margin calls and the liquidations and the price runs of APE and AMC that we saw, in which the broker dealers probably didn't liquidate the shorts, but the shorts probably liquidated themselves in an effort to close to deliver some of those shares, or even if they didn't liquidate themselves. I'm sorry, I misspoke. The shorts themselves went out to the open market and bought those shares and then delivered them to the broker dealer and then shorted it with probably with the help of other shorts, other companies like allegedly Citadel, So I hope that makes sense.
Yeah, I appreciate that. Thank you. Just there's a lot of misinformation going around, so I just wanted to get clarity on that. Thank you, bro.
Oh, no doubt,
And
no doubt. Thanks for asking, because I've been meaning to answer that for a while, and yeah, a lot of people. I've been saying it for a little while, but it gives me the opportunity to explain it again. Started like learning more about it. Yeah, what else, man? You got anything else going on over there?
yeah. Sorry, I just need to.
No rush. It's all good.
I'll let
I'm
someone
just
else
hanging out.
take a quick
Okay,
question here. I just gotta run upstairs here. I got my little one crying, so just
that's
give me
cool,
a few
brother. Go
minutes.
ahead. Family first.
Yeah.
Keith, you want to go ahead, bro? I see you got. You know what? Yeah, Keith, and
Yeah,
then D afterwards. Go ahead, buddy.
I'll try to make it quick. Jake brought up a point earlier about he was concerned that the institutions could take over, and I actually understand where he's coming from, and it does make a lot of sense when you look at the 4 billion ape units, right? Okay, so he said he's going to do a 1-for-1 transfer over, and that would make it approximately 1.4 billion. So that shows
Yep.
you right there that he is not transferring that 4 billion over. Where
Correct.
do they go? Where do they
Oh,
go? And that's
they
my
don't even
point. Why
exist
would
right
he
now.
let them? Yeah, why would he not use that to trap the apes more, or not the apes, the institutions more, and force a squeeze upon them, because he actually could at any time.
Because of this is what I'm thinking. Okay, this is the only thing that makes logical sense to me. The only thing that makes any logical sense. If Adam Aaron and AMC want to sell enough ape to pay off $1 billion of debt, they got to sell billions and billions of ape, probably all 4 billion of them. Okay, and that would greatly dilute the company and sell off the majority of AMC. But if they do a conversion and then a 1 to 10 reverse split, and now AMC is not even accounting for the price going up, but say it's just at $60, it only goes up to 10x, which I think it's going to go much higher than 10x, because after that 10x, the price should, go higher for a multitude of reasons. Well, let's say it doesn't. Let's just say it only goes up to $55 a share. Adam Aaron would only have to sell a couple 100 million shares of AMC in order to, or even fewer, in order to pay off, not even a couple 100 million shares at 66, 50, 55, $60 a share to pay off, like an approximate $1 billion worth of their debt.
How many shares does he have on the shelf of AMC? Do you know? That's what
There's
I
no
don't know.
number. There's no number there. So he could do the same thing with, I'm just going to throw out a number just to give an example, because it's 10 times higher. So he could do the same thing with, 400 million shares of AMC that he could do with 4 billion shares of ape. Does that make sense? At $60 a share, as opposed to $1.50 a share. He might only have to sell a small fraction of them. And so that would dilute AMC less and give them more money than if they were to sell 4 billion shares of ape. Those 4 billion shares of ape don't exist right now. They just have the ability to sell them. But instead of that, they'll have the ability to sell shares of AMC. And they'll have to sell much fewer for $60 a share or $80 or $100 a share than they do have to sell ape at $1.50 a share.
And there's a rule that 4.8, I think it was, that says that Adam Aaron could call any broker dealer that has AMC on its list, and they would have to tell him every single share that people own, their name, and their phone number. So, in my opinion, he has to know how many shorts is against his company total. And that's my point. Why in the hell, if you just said that 8 was working as intended, and they can only close out 420 million shorts, which that's not even the float. That's not even the whole float yet. So we believe that they're way over that, billions. Why would you get rid of them and not release, like, say, in 3 months, another billion? Make them fight for it. And if they don't
Well, they
close in,
gotta save the company. They can't let AMC and ape get shorted down to under $1. You know what I mean? So in order to save the company, they do a reverse split, and then the conversion, and then the reverse split, and then the dilution. So they're going to increase the share price a lot, and then they could sell shares to make a shitload of money to pay off some debt. And then when they pay off the debt that have the covenants behind them that prevent them from issuing a dividend, they can issue a dividend of 3 cents, 30 cents, whatever, a share. And then the short's got to pay that too.
You actually answered already that they had to cover the naked shorts. I do have a question about that. Is naked short same thing synthetic?
No, a synthetic share and a naked short are two different things, but they often go hand in hand. You see, a synthetic share is them selling a share for liquidity that they don't actually have. And then oftentimes they never even go out to the market and get the share to deliver that. Therefore, a synthetic share is created, and that leads to a failure to deliver. That's reported 35 days later.
And that's what I thought. Every share ends up a failure to deliver at some point, and then goes off exchange into a synthetic market that they trade on. Correct?
No, not every share. No, they could have a large number of shares. They usually don't. They usually front run the trades, right? They go out and say they sell 1 million shares to people in retail, and then they can only get 500,000 from other retailers that are selling. So then they're going to deliver those 500,000, and they're going to fail to deliver on the other 500,000, and then those become synthetic shares. So now you have 500,000 synthetic shares out there above the float. And let's just say that just happened in like 1 hour. So that just goes to show you how we could easily get to 50 billion or 100 billion synthetic shares from the market.
Yeah, that's what I meant. But every one of them is tracked by a failure to deliver. So they're all tracked some way. And what they do with them off exchange, to me, really doesn't matter to me, because they might end up having to drag up the price then if let's say a small institution wants to get out, nobody wants to sell their shit. Well, they're going to pay a high price for it.
Yeah.
So we don't know what that synthetic market is. Somebody was suggesting
we don't know. We just have an idea.
Yeah.
We just have an idea. We don't really know. And the price that they're trading in these dark pools, however many shares they're moving between themselves and stuff, we don't know what price they're paying. That shit never hits the ticker. Never fucking hits the ticker. Yeah, okay, hold on. I'm sorry, I lied. It does hit the ticker, but it's a tiny, tiny fraction of the price change on the share compared to what we would see if all those shares were sold on the fucking lit exchanges,
Well, and Twisted brought up a theory before that, look, there's really, none of us are selling shares, right? So you really can't have price discovery if nobody's selling fucking anything. They're buying between themselves. So of course they're going to push the price down as low as possible.
Yeah, it's a lot of spoofing going on and ladder attacks and shit like that are causing the price to go down artificially. They're putting up these gigantic trades at these low prices, and it's causing the price, the bid ask, the national best bid and offer to become lower. And as it goes lower, then they can, before it gets down to their execution of those sales, they just cancel it, within like the last 30 minutes of the day. They cancel that order, all those orders that are spoofing. And then they can, either buy shares back at this lower price to deliver on their shorts, or they can continue to spoof it and ladder attack it and short it the next day, which is, in my opinion, what's been happening to a heavy extent.
That's the only thing I think that Lou ever said that I actually believed in, that there was 2 sets of books. I was like, it makes sense. When they call it a synthetic market, I mean, they in 2014 they even come out and say, hey, we're trading on a synthetic market. So that does.
I don't know if I would say there's 2 sets of books, but the analogy makes sense, even though it's not literal. Like, he doesn't literally, maybe he literally means it. I don't literally think there are 2 books, but whatever price it's trading on dark pools, it's not the same fucking price that it's trading, on the market. So,
well, do you think that's what they did with FTX, that they tried to bring some of these synthetics onto FTX and make retail actually pay for their synthetics?
Well, I don't call those synthetics. I call those phantom shares. I think the FTX is more like phantom shares in the sense that.
Well, that's what a synthetic market actually is.
Yeah, kinda. But a synthetic actually exists, whereas a phantom doesn't actually exist. It's like a ghost share. It's not even a fucking, like a synthetic. You can call like a fake share, like a synthetically created share, right? Like, we have like real diamonds that come out of the earth, and then you got synthetic diamonds that are created in a lab. A synthetic share is like a synthetic diamond that's created in a lab from the market maker. Whereas a phantom share is like those shares that were never purchased by FTX and Bitrex, because we know this on their bankruptcy filing, FTX didn't have a single fucking share of AMC, but they still were selling. They were still, had these 625 million phantom shares of AMC on there that they were, because it's because it's an OTC derivative, the FTX phantom shares could be traded against and with and as collateral and as share borrows by the market makers and the short hedge funds, etc. So that was like a huge source of corruption and cheap borrows for these guys over the last 2 years. That's now gone.
Yeah, he even made a video, Sam did, about how he could take an empty box and turn it into, what was it, $200 million in a month or something like that, and he actually did.
Yeah, that's funny. That's cool, man. Glad to hear that. Yeah, I'm not surprised. That's pretty cool. Awesome, dude. Yeah, thanks, Keith. Yeah, good questions, man. You make a good point. D, do you mind? I don't know if you're still there, D, but if you have any questions or if you had anything you'd like to say, by all means, the floor is open.
Hi guys.
Hello.
I kind of wanted to go back to something you just said regarding the CBDC. For the audience that don't know, there is a parallel economy that is growing right now. And I know I do not want to be a part of the system. So I did my research and made sure that I shop with the parallel, the companies, the conservative companies that are helping people like us, patriots like us. And I have some information if you guys want it. I also want to encourage you guys, if you have assets as well, try to get your trust set up. I feel like that will definitely help, especially, if you have, yeah, you know what I'm talking about, Marcel. If you have a good amount of money and stuff like that, just try to get a trust set up. What else? I also wanted to mention even phone. Don't, do not shop, do not participate with these companies that hate you. They hate us. They're literally trying to kill us, right? So the last
But I
thing that
love
you want to
Amazon.
do. Yeah, exactly. So I mean, there's alternate for every single companies that is out here. There's alternate. There's the phone companies. There's the financial. There's American Financing. If you have a home, you can refinance with them or get your loan with them for your home. There's American First Land. I mean, there's so many different companies out here that are doing the right thing and want to see this country thrive. So I would just encourage you to do the research. I'm willing to, give you guys information if you want it. But take yourself out of it. I know I will not accept the CBDC, and I'm doing everything right now, to make sure that I am set up for when this day come. I have strong faith in God, and I honestly think a lot of this bullshit that they're talking about will not happen. But unfortunately, like we don't know, but I just have faith that it's not going to happen, but I am prepared for the worst. And yeah, that's all I wanted to say because I know some people don't know about these things. So again, just the information is out there. So that's all.
Thanks so much, D. Yeah, you're absolutely on point. People need to get, financially educate themselves and, reach out to a CPA and a tax attorney and pay, what you got to pay to have a 1-hour consultation with them or, so you can figure out what works best for you because I'm not a financial or a tax advisor, and they would be able to better help people to figure out ways to fight inflation, to fight the CBDC, to properly hedge themselves, to make sure that they've got enough, cash and other tangible assets,
in which that they could, invest their money and still maintain a good cash position. Because, even still right now, cash is still king. Even though you can buy shit with silver and gold, it's a lot harder to buy something at the grocery store right now, in precious metals. Even though that's probably likely to change in the near future. Yeah, people should definitely be looking into those things. So thanks so much, Dee, for bringing that up. That was a wonderful point. Absolutely.
Dee, I got a question for you regarding, you said put your property in a trust. So how does that help with the CBDC?
No, I said put everything for me. I'm talking about money. I recently sold my property, so I have.
Oh, I got it.
Yeah, I got the IUL. I'm sure you know about the whole life insurance, the IUL, and all those things.
Yeah.
Those will definitely, be protected. The banks have been doing it for so many years. If all these banks, these is the banks that we're talking about. That's where their money is at too. Some of these, like for instance, Transamerica, Pacific Life, those insurances have been around for over 100 years. So they went through the transition back in 1971 when, the currency was taken off gold. Like they've been through this situation where like the money, the whole uncertainty and, that we're going through right now. So, I have a financial advisor like Butcher was talking about. I'm sorry, but yeah, so that's it.
That's awesome. Yeah.
Yeah, I
Thanks for
appreciate
bringing
that.
that up. That's a good
Thanks, Dee.
point. No doubt. You rock, D. Hey, and thanks for your support. I've been seeing you around for, probably a couple of years now. And you've been rocking it. Thanks for staying positive and for always being supportive. You're amazing.
Absolutely. Yeah, I've been following you, and I just appreciate the information that you give us. This is not it's so rocky, like what we're going through right now with this whole AMC. The whole thing is just so rocky. So it's really nice to have support, like with you guys. It really is. And I'm here for you guys. It's like, I feel like I know we don't know each other, but, I'm a part of the family.
Yeah, we're all in this together, We're all ape family here now, retail investors, period. These assholes aren't going to look out for us. So, just like at home, with your family and friends, you got to look out for each other. Right here, we got to look out for each other too, and do what we got to do to make sure that everyone's involved and educated. Because the more retail that we get educated, in these space calls and YouTube and Twitter and Reddit, all that shit, the more that they can educate their family and friends at home that aren't on social media. So that's great. Yeah, if anybody's got questions in regards to that, shoot D a message. Don't be sneaky. Don't be weird in the DMs, all right? Keep it professional.
Earlier, boss kind of pointed to he put his stuff into local credit unions and local banks, right? And that is a big push that we need to do is get your shit out of the big money bank hands. Put it in your local credit unions and your local banks, because that's where it goes. And if you want to look at a big bank, just look at it like a Netflix subscription. You're subscribing to that bank. Next month, they know exactly how much money you got coming in there. They know the next month, the next month, and the next month. And what do? They plan on how to steal or use every bit of that against you. So they're using all of our money against us. And I can give you an example. When Walmart started, there was a big thing about them, and there was a protest. That protest lasted less than 1 day before Walmart caved in, because the people said, fuck Walmart, we're not going there, and we're going to plan on striking for 1 week. During the first day, Walmart caved in. So if you don't think you can crush the big banks, yeah, you can, when millions and millions of people take their money out and put it in a local credit union.
Yeah, man. When I left Huntington Bank, I went in there and I got a lot of fucking money out. And as a matter of fact, I didn't want to get it out in a check, right? They were begging me, like literally the fucking branch manager was like practically begging me to take the money in a certified check. But I bullshitted him. I said, no, I can't do it. You know what I mean? I lied to him. I said, no, I can't take any of this money out. Our accountant wants me to take it out, cash this check. I can't write another check to another bank, because of a buyout purpose, blah, blah, blah. And, it was a few $100,000. And my
banker at Huntington Bank. He was pissed. Like, he was cordial. He was nice about it, but he was pissed. He was trying to figure out every way. He was asking me questions like, "Oh, can't you just do this? Can't you just take it as a certified check? You know, oh, what if you take it over there and deposit it over there?" I said, "No, man, I want cash." You know, I had to order it a week and a half in advance for them to get a Brinks truck over there to deliver the fucking cash. And then they got pissed off because I couldn't fucking pick it up the day that I told them I was going to pick it up, because they were late. I was supposed to get it in a week. It took them a week and a half, even still. So I'm like, "No, I can't come today. You're gonna have to wait till next Monday when I can make it out there." And then I went over there and got it, and they had to, literally count out my fucking racks in the front of me after the branch had closed, because they didn't want anybody to steal it. Because if there's still money still in the bank when the bank gets robbed, then I'm still covered by the FDIC, and they're out this money. So they took a lot of precautions, and they really tried hard to talk me out of closing that bank account and getting that money out of those accounts in cash. And then same thing with my BMO Harris accounts, like I drained the shit out of those, and I took out my money out of there, and they weren't too happy to see me go, when I left that bank as well. And B of A was the same way. B of A was the same when I asked them to give me cash. I love cash. I love holding fucking cash, so I told them, I was like, "Hey, I want this in cash. I want to withdraw all my money." They're like, "Oh, can't we give you a check, or whatever, so you could deposit in your other branch?" I'm like, "I'm not going to deposit into a bank. I'm taking it elsewhere. Give me cash." And that took them some time too, and that was a pain in the ass. But the banks do not want you to fucking leave. When my mom closed out her 401, her IRA, I should say, what was that? U.S. Bank. They were fucking pissed. They were livid. They were doing everything they could to try to talk her into putting it in a CD or putting it over here or putting it over there, investing it there. And she took that shit out. Actually, that was just for moving it from the IRA to a regular bank account. They were really fucking upset. And she didn't even take her money out of that bank. She just moved her money from the IRA into a regular checking account. And they were really upset with her. All right. Yeah. Sorry if I went on a tangent there on that one too. I seem to be doing that tonight.
Hey, boss, just a question for you. You said when you took your money out, and you said you opened up accounts in credit unions.
Yeah.
So did they, when you showed up there?
Oh, they were so happy. They do not see that amount of cash at credit unions. Usually they see like smaller amounts of cash. I walked in there with a backpack full of racks with fucking all banded from my other banks. They were like, "What?" Like, it was sweet, dude. They're like, "Oh my God, look, we're not used to this." They brought out the money counter and everybody, the managers and all that shit. And yeah, I love it. But regardless,
awesome.
Yeah, what about it? My bad. What about it?
No. Yeah, I was just curious. I mean, they probably asked you for like where's the money from? Or show us your receipt.
Not really. I mean, it was all there, and the banks, the bands, for every $10,000 is banded. I had stacks of them, and they're all banded with the name and the serial number of the bank that they came from.
Oh,
so
okay.
They could see right away that all the bands were still intact. And I had my withdrawal slips that I had to sign. I had to sign special forms from the bank stating that if I got robbed or if I lost the money after I stepped foot out of the bank, that they would not be held liable. I had to sign all sorts of disclosures and shit like that from my other banks to be able to leave with that amount of cash. So my credit union, I pulled everything out of my back. I had a fucking back. I dumped it on the fucking thing and just started dumping out piles of money, and they could see all the bands. They're like, "Holy shit. Okay, this is going to be fun." So they didn't say anything. They could see right there that this is from this bank and this is from that bank, and they're all serialized,
Boss, any trouble from the IRA doing anything like that? Usually if it's over like 10 grand, they give you trouble for it or ask questions or red flag it or...
Yeah, I'm sure it got sent to the IRS without a doubt. I'm sure it did, but I'm not like laundering money or anything, so I got nothing to worry about. You know what I mean? Yeah.
And
so
I
took it and I moved it around.
I mean,
yeah, there's a paper trail.
They can see a withdrawal and then a deposit from two different banks. Like it's there.
Yeah, exactly. But I'm not hiding any money or anything like that. I was just moving it from one bank to credit unions and things like that. So, I had to put it back into the bank to be able to order other things with it, or if I bought,
metals or something like that with it, I still got to report it when the tax season comes around, like what I spent money on, because it's going to come up on my fucking taxes. And I've been through an audit before successfully from the IRS, and it's an absolute fucking nightmare. I don't want to ever do that again. But I didn't even do anything wrong. I filed a bankruptcy to close a business in 2016, and my bankruptcy attorney that was closing that business for me she submitted a piece of paper wrong, and she had one checkbox marked incorrectly. And because of that, it flagged me in the IRS, and I pretty much spent about 80 hours over the next 2-month period compiling paperwork and documents to submit to the IRS. And I had to drive downtown to downtown Chicago to give them this fucking gigantic pile of fucking paperwork and receipts and USB drives and shit, as well as like written statements and other things that I had to do and come up with to prove to them, here, like, I'm just filing a bankruptcy to close this business. I'm not trying to commit fraud here. I didn't even know that box was checked. And in the end, I passed the audit with flying colors, and my attorney had to return me my money. So I actually got my bankruptcy for free. I had to file for bankruptcy for free because I got fucked out of 80 hours of my life by my attorney because she marked one box wrong.
Bro, first of all, fire your attorney.
She's fired, bro.
That's financial advice.
It's a bankruptcy attorney, bro. I'll never need her again. But you know what I mean? What do you think? You think I was happy with her about that? No.
Yeah,
That's why the judge ordered her to return my money or lose her license. So it's like,
wow.
Yeah, she had no choice. She gladly gave me money. She's like, please cash this check right away. Please cash this check. Seriously.
Good.
Yeah.
After for damages, like I
felt
sleep.
bad.
I couldn't sleep. I'm on Tylenol 8 times a day.
Well, I mean, I did submit a statement that said something like, it wasn't like that exaggerated, but no, I did explain it to the IRS in a written letter. And I told them that. I'm like, I spent like all this fucking time coming up with all this crap for you guys because this one fucking box was checked wrong. I'm like, I just signed that shit. I didn't really know what any of this meant,
Hey, boss, I got a last question here for you before I call it a night.
Yeah.
Just coming back to Ape and AMC, do you, I didn't check recently, but do you know when this conversion is supposed to happen?
No, because we actually have to vote on it first.
Oh, right. Sorry, I meant the vote.
Oh, yeah, no, we don't have a date yet. First of all, AMC and Ann Marin, I'm sure will announce it from the top of the highest mountain, and so will we, right? Like everybody in the community. But also, you'll receive proxy information like emails and shit from your broker dealer, most likely, depending on your broker. They should email you with all the information to let you know, hey, this is what's up for a vote. This is the link you go to vote, and this is how you do it. So
what was that date he set for June the 27th? Was that earnings call coming up at that time, or what was it? There was a date of June the 27th, and I didn't quite understand what that was for.
That doesn't ring a bell. Do you guys know anything about that?
I didn't hear anything.
June 27th? Is there anything scheduled for June 27th that you might know about? That doesn't ring a bell for me. What?
I'm pretty sure it was in the 8K.
Probably, but unless you got more info, I don't really. It doesn't ring a bell to me. Like there was nothing about anything in June that struck me out of the ordinary on the 8K. But if you figure it out, or in the future, if you look it up and find it, tag me in it on Twitter. I'd love to take a look at it, but it doesn't ring a bell right now, bro.
So I say I read it and it didn't make sense to me, so I kind of just blew it off, really.
Yeah, I'm not too concerned about it,
Definitive information on it.
I hear
I
you.
was going to say something. If people remember before payment for order flow, right? Like E-Trade used to charge you $6.99 a trade.
Yeah, that's the good old days, bro. I miss that shit.
I bought E-Trade when they come out for $5. But anyway, I was paying $6.99 a trade, and I scout, right? So I traded $600,000 in like a month. And I said, I don't want to pay $6.99 anymore. And they said, how much do you want to pay me? I said, $2. They said, okay, we'll make it $2.99. So I'm just telling you, you do have, you can bargain with them. Don't
negotiate with them a little bit, right?
Don't accept what they give you if you don't like it. Same thing with your bank. If you don't like the percentage, hey, it doesn't hurt to ask. I had a neighbor that never paid anything the regular price. And this is how embarrassing it was. He walked up to the counter, grabbed the pack of gum, and it said 50 cents. He said, "I don't want to pay 50 cents for this. Can I pay a quarter?" She goes, "Let me go get the manager." And they gave it to him for a quarter. I'm like, damn, dude. And he did that. He did that with everything. And he said, "Oh, my dad's an insurance broker." I said, "Well, now I understand why." But it was embarrassing as fuck. But the guy did it, and it's crazy how it works.
People that have money have no, like, not all of them, but a lot of people that have the most money have no shame, and they're not, and even still, like me, like, I wouldn't do that, right? That's a little extra, but I will always try to get a better price. You know what I mean? You're absolutely right, dude. It's better to negotiate with them and try to get them lower. Like you said, like E-Trade and whatnot, they were willing to do it for 3 instead of 7. Like, hey, that's a big savings to you, but they still get to keep you as a customer, and they could see that you're scalping. They could see that you got a lot of money in there, so they want to keep you at $3 a trade, knowing they're going to make bank off of you instead of letting you go to somebody else. So yeah, I think that's fabulous. Definitely try to negotiate with them if you can, cordially. And hey, we're going to be filthy fucking rich, so your broker's going to want to keep you. You know what I'm saying? Right. Your broker's going to want to keep you. So,
Marcel, I'm going to head off. I really appreciate the space call, and I hope you do another one soon. And
thanks,
thank
brother.
you, everybody. Really appreciate it, man. Very informative.
Thank you so much, man. It's been great having you. You've been extremely educational and for yourself, and I appreciate the questions, man. You asked some kick-ass questions. I think I got it in me. Yeah, of course, dude. Of course. I think I got it in me for one more question if anybody wants to. If not, I'm going to call it a night too, seeing it's how it's 1:50 in the morning. But Keith or Diamond or D, if you guys got anything else you'd like to say, by all means, shoot.
No, I'm good.
All right. Thank you, D. I appreciate all you guys. Yeah, I'm really looking forward to what's coming, to be honest with you guys. Looking forward to the vote. And as soon as I hear anything about it or see anything, I'll let you all know, and I'm sure I'll be looking to you all as well. If you guys hear anything, by all means, speak up so that we can all inform all of our family and friends about it. Hey, Diamond, go ahead, bro.
Yeah, I know you're into precious metals and all that. I'm holding over 60K worth of silver. I don't know if you follow the Wall Street silver pages at all on the internet or anything like that. But what do you think the end game with that? If you got time, if I know it's off subject, but if you want to.
That's okay. End game. Well, central banks are loading the fuck up on gold and silver. They're buying more gold and silver now than they ever have in history, like massive amounts. Like the precious metals buying went up like 800% this fucking past year. And that's not by accident. That's because they know they've got all these liabilities. They know that the fiat is fucked and the Ponzi is pretty much over. And so they need to have something with which to back, their other digital dollars and their other, schemes with. At the end of the day, precious metals is still king because, gold and silver are required for manufacturing and pharmaceutical and all sorts of other purposes, whether it be, vanity things like jewelry and watches or, like actual, semiconductor chips and all sorts of other things that I won't get into, like splitting hairs of what it is. You guys can look it up, right? And see what they're used for. But they actually, it's money that has a value. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
my fucking money.
You're an original,
Hey,
aren't you?
yelling, cowboy, give me the fucking money. Get the goddamn money printer out.
Great. The bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out.